This is Sherry. I'm your host for today's Traders Exclusive Strategy Series. Today we have 3 experts who are going to tell us how to read the price bar on a chart accurately, how to learn how to pick your stops with each entry, learn day trading lingo so that you can apply it to your strategy. So check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. And this is also where you're going to find the recording of today's webinar. It's at tradersexclusive.com/archived_webinars. Before we get started, I'd like to share a quick disclaimer with you. As always, you should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations presented here are subject to change at any time. Past performance is not necessarily indicative of future results. Our first speaker would love to have audience participation, so please take notes and help him out when he needs you to participate. So our first speaker is Dr. Barry Burns. And he's going to talk to us about how to trade pure price action. Dr. Burns started his study of the markets under the direction of his late father, Patrick F. Burns, who accumulated 70 years of trading experience in his lifetime. And a few of Barry's accomplishments include writing Trend Trading for Dummies, seminar presenter for several exchanges, including the CME Group and Eurex. He's the author of Top Dog Trading 5 Energy Methodology Plugin for Metastock. He has received several years of Reader's Choice Awards for technical analysis websites and trading schools by Technical Analysis of Stocks and Commodities magazine. Published many articles for various outlets, including eSignal Central. And he founded Top Dog Trading to help students shorten their learning curves in becoming traders. Welcome, Barry. Thanks for joining us. I'm going to, you think after a year or two, I'd get good at this, switching things around.
There you go. I got it.
Be able to do that. Now I'm also going to make you so you can see when people are responding. There you go. Thank you.
Now,
thanks for being here with us.
Of course, my pleasure, my pleasure. Now, let's see if I can get my thing to work here. It's wanting to show the wrong screen for some reason. All right, let's see, go there. PowerPoint. That's not my PowerPoint over there. It's that one. This is so weird. Okay, well, we're just gonna have to do the whole monitor. All right, that should work. All righty. Hello, everyone. And by the way, thank you so much for having me here. I appreciate that. Always a pleasure to be here and participate in your events. So yes, I've got some good stuff for you today. So we're going to cover, as you can see, obviously, how to trade pure price action, and I'm going to throw in some bonus stuff for you as well. So we're going to start out with some basics to kind of get everybody on board. So if at the beginning it's a little basic for you, I still encourage you to listen, because even when it comes just to the basics of reading price bars, I have a couple of principles that I use that make it easy. So these principles then you can apply to any market, any chart, any time frame, and it makes it so much easier. When you understand the concept behind the bar formation, you don't have to memorize 1,000 different types of Japanese candlestick patterns. Nothing wrong with doing that if you want to, but you can really shortcut it by understanding the principles behind it and then read the supply demand of that Japanese candlestick pattern and understand what it's telling you about which way the market's going to go. So, and plus, when you understand the reason behind it, hey, then it helps you when it comes to your trading psychology, so that when you go to trade, you're not trading something just because, oh, Marie said it, or Barry said it, or Billy Bob said it, or Jimmy Tim said it, or whatever. It's because you understand it. you have that internal knowledge and logical understanding. And boy, does that change your whole psychology, give you more confidence, etc. So that's how I like to teach, so that you come away self-empowered. All right, so let's see here. Oh, let me bring up my questions box and separate that. I see Bando just said hi. Hi, Bando. Nice to have you here. So yes, you're welcome to participate and ask questions, make comments as I'm talking. That would be great. I'll check over here at the questions box periodically, and I love to do interactive sessions. And wow, we got people really coming in now, so that's awesome. All right, so let's see. There's my ugly mug. Well, let's see. I already got a nice invitations or invitation introduction. So I'm going to save some time by just flipping through this really fast. And there we go. Oh, by the way, I do have a podcast. If you want free stuff, anybody here like free stuff? If you like free stuff, this is the place to be, because I got lots of free stuff for you today. One of them is my podcast, and you just type in Top Dog Trading into the search bar of whatever podcast platform you use, and you'll find my podcast. Got a lot of episodes up there. It says 37. I need to actually update the slide. We got more than that now. And man, I interview some great traders, trading psychologists. We talk a lot about the psychology of trading, which people find very helpful. All free. And then also I've got a YouTube channel, again, freebie stuff, over 200. I think we're approaching 300 trading videos. So that's been super popular. People have really responded to that very well. Subscribe. And again, that needs to be updated. I'm right on the brink of 100,000 subscribers actually at this time. So yeah, come on board. Join the Top Dog Trading family. I just want to say one more thing. We already saw the disclaimer slide, so I'm not going to read it again or say it again, but just put a little different emphasis on it, because unfortunately, a lot of traders don't really pay that much attention to these. And that's because I think, well, it's just legalese, so they don't take it seriously. Think of it as education, because that's really what it is. The regulators are trying to protect us from a lot of misconceptions. And so, go to our websites, read the full disclaimers, and read it with the eyes of a student saying, okay, they're trying to protect me and help me keep my money. And look at it through that filter. And I think that, well, I know that that'll really help you in your trading. So, okay, today we're going to talk about price bars and volume. So let's begin with the beginning. All right, so what is a bar? If I were to ask you, what is a bar? All right, well, there you go. That is obviously a bar. That's not really what we're talking about today. That's not a healthy bar, not encouraging people to, consume, what do they call them, spirits. If you're health conscious, we also have health bars now, which is kind of nice that the culture is going into healthy way. I like that. But for those of us who are traders, we're looking at something more like, this. Okay, so that's one bar. So like I said, we're going to start at the beginning and start with one bar price logic. So how do we read this bar? Here's how I read it. Again, the logic behind it. Not just going to give you the fancy poetic Japanese names. I'm going to actually help you to understand the logic behind it. So there's two things we want to look at to understand the logic of what's happening in the market that creates this kind of map. Think of price bars as maps of mass psychology. So the first thing is the range of the bar from the high to the low. So the wider the range, the more dramatic and meaningful the movement. That's number one. The second part of how we interpret the bar is where the open is, where the close is in relation to the open. Could say it either way, but where the bar closes, that is where the market consensus is. All the market participants said, after all was said and done during this period of time, whatever it is, let's say it's a daily bar, just for argument's sake. So market participants are saying, you know what, after all said and done during this day, this is the price we value the market at today. After all the news, the gossip, the rumors, the commentary, the opinions, blah, 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 blah. All right, we're saying it's worth this at the end of today. Now, tomorrow that's going to change because opinions change, new news comes out, all that kind of stuff. So remember, two principles: the range of the bar from low to high, and the relationship of the close to the open. Therefore, this would be a 1 bar, very bullish bar. All right, and then conversely, very bearish bar, wide range from high to low, and the close is way below the open. And in fact, I'll give you another little subset of that second principle. We want the close to be within about 25%, no more than 30% away from the low in order for it to be a very, very bearish bar. All right, knowing just these principles now, those two principles will help you understand candlesticks, bars. So let's apply it here. So now we've got, again, wide range bar from the low to the high, but the open and the close are very close together. But the key is the close. And it is, again, near the bottom of the low, right? So it's within, say, 25, 30% of the low. And therefore, again, if you think about what's happening, what causes this pattern is during this period of time, and it could be an intraday bar. So let's say it's a 60-minute bar this time. So what that means is during that hour, market participants have paid prices that were all along here. But after all is said and done, during that hour, the market participants as a mass decided that now really it's worth this amount, whatever the number would be over here, based on whatever market it is, right? Could be stocks, futures, Forex, doesn't matter. Cryptocurrencies. Okay, now I intentionally, here's a little side note, but that's very, very important. I intentionally chose a bar here where the real body is green. And I did that very intentionally because I have found that a lot of people, they have this bias that if the real body is green, it's bullish, and if it's red, it's bearish. And that is not true. Got to protect yourself against that. I want to bring that into your conscious mind so you're very aware of it and you don't get fooled by that. There's a lot of noise in the market. So again, when I refer to market participants, all the people trading all over the world. So when you think about that, who are the market participants? Well, gosh, they're people in the United States, Europe, Asia, Australasia. I mean, just all the continents of the world on different data speeds, trading different time frames, and people going through different brokers. Some orders are going directly to the exchange, some are going through the brokers and then to the exchange, some are on their computer and then on the broker and then to the exchange. So bottom line is, all of that creates a bit of noisiness as to where these prices settle. So don't get too myopic, don't get too precise about the exact penny tick, well, pixel even on your monitor as to where that price is going to close. Okay, or this also applies to support resistance levels because the markets are not really that pinpoint accurate when you put together all those people trading all those instruments, trading all those different time frames on all those different data speeds. Okay. So this is something where I find that people who have certain mindsets, who are very, very, very exacting and precise, and they have to be that in their careers. People like accountants and engineers, they have to be really, really precise and accurate in everything they do because, well, it can save lives, right? If an engineer builds a bridge, we want that bridge to be perfect. We don't want people, falling off the bridge, or the bridge breaking and cars falling into the river. So that's awesome. But in trading, they need to make an adjustment. They need to understand, markets are not that precise because we're not dealing with engineering and physics. We're dealing with mass psychology. And we people, we're kind of messy. Our minds are kind of messy. Our behaviors are kind of messy. And then not only as individuals, then when you put us together as a group, oh my gosh, it gets really crazy. So anyway, you look at the big picture, the principle of the thing, and the principle here is that wide range bar, so lots of activity, yep, meaningful bar from high to low, and the close, sure, it was above the open, but not by much. That's just basically noise. All right, so it's a bearish bar. Now, in fact, what we call this type of bar, what I call this type of bar, is a rejection of value bar. And that rejection of value term comes from market profile. And what it means is this long wick up here, that's the key. This long wick, that is a rejection of all these prices up here. They've tested all these prices and orders were filled, by the way, on all these prices. But by the end of the hour, in this case, the market participant said, nah, we're not going to pay that high price. Nope, as a mass, we're not going to pay that high price. Nope, as a group, we don't want to pay that high price. Nope, we can't get enough people willing to sell it to us. So therefore, boom, comes on down. All right, so I don't have to go into as much detail on this one. As you can see, it's the converse of the other one. So again, I chose a red bar this time to, again, make the point and ingrain in your brain that even though it's red, that doesn't mean it's a bearish bar. But no, it closes near the top and the top 1/3 of the bar, wide range, and therefore it is a bullish bar. And the long wick on the bottom maps the rejection of value of these lower prices. So these lower prices, no, couldn't get filled there, or they got few people got filled, but not the masses, not enough. And so this is where the majority of the activity happened. All right, now that's one bar logic. So we got to start there because the building block of a chart is a bar. And then we trade bar by bar by bar by bar, and we put them together to form a well, kind of a story, if you will, as to what the markets are doing. The supply and the demand is really what it all comes down to. And if you think about it, that's what these bars are doing, is they are monitoring and mapping supply and demand. So now 2-bar logic. All right, so we have a bearish bar followed by a bullish bar. And the things we look at to determine what they are: wide range, high to low, closes near the low. Next bar engulfs it, wider range, closes near the high. So this bar invalidates the bar before it. And so, yes, market sentiment shifts. And this is how you find entries. We find entries by looking for sentiment changes where momentum shifts. That's where you get cycle highs and lows put in that are great entry points. Opposite side of that is wide range green bar followed by wide range red bar. And now that's 2-bar logic of a bearish swing high. All right, I think pretty simple. Adding now our rejection of value bar, wide range bar, long wick on the top, rejecting all of those higher prices after a green bar, after a bullish bar, I should say. And that is a 2-bar bearish pattern. And finally, a 2-bar bullish pattern with the rejection of value on the bottom, the long wick on the bottom. All right. Okay. So now what about this? What about this? Now, wait a minute. We've got our wide range bar. We've got close near the high. The next one is narrow range bar. And open and close are, pretty close together. Now, whenever we have a narrow range bar, it's simple. It just means neutral. Nada, nothing. So narrow range bar is not enough action to determine any type of direction or sentiment or supply demand. I don't care if the real body is green or red or pink or purple or blue or chartreuse. Doesn't matter, because again, that's just noise in the market. Got to allow for a little bit of noise, and that's not enough to be significant. So how we read this then is we retain the bullishness of the last bar. So we are still, this 2-bar logic is we are still bullish. This bar has not negated the bar before it. And the market's just pausing. Maybe some people are taking profits or whatever. Okay. Now, holy mackerel, Mandy, let's pull up a whole bunch of bars because this is what a chart looks like. But now we've got our little foundation built, our 2 bricks. And now we're going to put these together. And now we're going to try to see, hey, will this actually help us make some money? All right, I'd love to have some participation now, okay? Now that I've laid the foundation for you. Let's see, let's do a little experiment. All right, you up for an experiment? Okay, put away your Twitter accounts. stop your Twittering, stop your emailing, turn off TikTok. Okay, I know that, some cool stuff on TikTok and all that. I dig it. Discord's off. Let's learn how to trade, right? A little focus. Now, what about right here? Here's the question. For the bars marked, did they validate or invalidate the price action of the bar that precedes them? So type into the questions box or whatever the box is called, the chat box, whatever it is, right here. Does this bar validate? So we got a move coming down. Whoops, lost my little cursor there. So we have a little move coming down. And then this bar right here. What do you make of that bar? Does that bar invalidate the down move where it would be a good buy signal? Or does it validate, invalidate, whatever? What do you think? Type it in. And I'll tell you what, I'll sweeten the pot here. If you type in an answer, any answer, it doesn't even have to be right, okay? You can even be wrong and become a winner today. You just type something in and I will give you, what should I do? I'll give you, let's make it big. I'll give you 1 trillion top dog trading admiration points. How's that? 1 trillion, that's right. We're not playing with little, prizes here today. We're going all the way out. 1 trillion top dog trading admiration points. Oh, look at that. Now people are coming in. There we go. I had to bribe you. That's awesome. Great. Thank you, Neil, Alejandro, Mari, Gurinder, Sambando, my main man. First, by the way, Bando, you get the first, like people go onto YouTube and they type first when they do the first comment. So Bando gets first. So you're going to get 1 trillion top dog trading admiration points for being first. Thank you, Neil. Okay, so actually we have, I don't know if you could see each other's comments there, but we have a split decision from the audience, a split decision, which is awesome because you know what? This is like a real life demonstration, real time demonstration that this is what the markets are like. You get some people saying one thing, you get other people saying the other thing. That's what it takes to make a market. If someone's buying, hey, you got to have somebody selling to you. So if you're bullish, you got to have someone bearish in order to complete a trade, right? And so there's got to be different opinions. And so that's awesome. All right, based on what I taught you today, this bar is a narrow range bar. Compare it with all the other bars around it, right? So from when I say narrow range, from low to high, narrow range. Much more narrow range than that bar, that bar, that bar, that bar, that bar, even that bar, that bar, that bar, that bar. So you got wide range bars, you got narrow range bars. That is a narrow range bar. Therefore, it neither validates or invalidates. It just really means nothing. So yeah, I there we go, got a little laser beamer on there. So I kind of tricked you there a little bit, didn't I? Yep, I did. But this was for a very, very strategic reason. And it goes toward a really important lesson that goes beyond candlestick bar patterns. We as human beings have this thing in our brain called forward-looking bias. And I intentionally allowed you to see what happened afterwards. And so our brain sees that, and then it wants to find a reason as to why the market went up from there. And that's forward-looking bias. And so, if you had forward-looking bias, you would say, yeah, that invalidates this part, so it's going to go up. The truth is, there was no high probability signal or setup that would tell us that the price is going to go up from here. There just wasn't one. And by the way, I'm going to tell you something really important right now. The vast majority of the time in the markets, when you're trading, there will not be a high probability setup that precedes a move in the market. And I find that this is one of the reasons, and I'm really learning this more and more and more as I talk to more and more people and teach more and more people, that this is one of the reasons that people lose money, is that they're assuming that every move in the market is preceded by a high probability trade, and you just got to figure out what was that setup. What was the market telling me? How could I have caught that move? And my friends, I'm here to tell you, 90% of the time, there was no way you could catch it or that you would know that move was going to happen before it happened. Maybe 10% of the time there is. And that's the one that we trade. That's the 10% we trade. You know, there's a famous book you might have heard called Random Walk Down Wall Street. And they postulate that the markets are, well, a random walk, and that everything that can be known about the market's already known and already priced into the market, and the markets are very efficiently priced. And I agree with a lot that's in that book. Now, even the authors have come back and kind of modified their position a little bit because they were very, very, very black and white about it at the beginning. But still, most of the time, the market is a random walk in the sense that there's no way to predict what it's going to do next. So, you know, we as human beings, we get frustrated when the market makes a move and we don't get in it. We're like, oh, how could I have gotten into that move? We try to reverse engineer it. And, you know, once in a while, you'll come across something and that'll be a great setup for you in the future. Most of the time, please just adjust your mindset to understand most of the time there is no setup. There is no high. And when I say setup, we're trading probabilities, right? And so there's no high probability, statistical high probability model that will get you into most setups. So back to our original thing, it's a narrow range bar, therefore it means nothing, it's neutral, and there was none. Now here, if we go here, this bar does invalidate that one. Why? Well, first of all, step one, it's what? Wide range. Step one. What about this one? Well, it's a neutral bar. So the previous sentiment remains. This one, this green bar invalidates the red one. Okay, so those were good. All right. Oh, you know, here we go. I've noticed that GoToWebinar doesn't allow me to have my spotlight on and change my slides anymore. I don't know why that is. Used to allow it. Okay, so let me do this. Now, what about this one? Now I'm giving you, let's do another quiz. Now I'm going to make it harder for you. Okay, so we talked about forward-looking bias, so we're going to take that away. This is how we have to trade. We have to trade on the hard red edge of the screen. So right at this plot, right here, this spot, I should say, what do you think the market's going to do from here? Based on the price bar formation, what would you expect to happen next? Okay, type that in to the chat box. And the answers could be, I mean, there's three choices, up, down, or go sideways. All right, let's see, this time I'm going to give away 10 trillion top dog trading admiration points. All right, so good, Mari. Neil, good, excellent answer. Nice, very good, very smart, I like it. Michelle, thank you. Great. All these people racking up 10 trillion top dog trading admiration points. What are top dog trading admiration points? They are, well, when I read off your name, you're getting the admiration of everyone in the audience. That's what it is. Yeah, just, you know, hey, I'm a dad. I've got two daughters, so I'm almost legally obligated to tell dumb dad jokes. So yeah, I got to fulfill my obligation. Okay, so very good. Thank you for participating. Much appreciated. Let's see what happened. What happened was it went up. Okay, now why? So we had a gap, but not all gaps close, right? So we had a gap down. Not all gaps close, some do, some don't. So now we have to determine, well, is the gap going to close or not? So it goes sideways for a little bit, goes down, explores. This is called, you know, price exploration, comes down, comes back up, and then we get this one bar. Now remember this bar pattern I showed you, wide range bar from high to low, and open and close near the high. So price rejection of these low values, and look where it rejected, where it tested. It tested the support of this lowest low of the day. So lowest low of the day is put in, we test it and reject it. That is a bullish signal. And you got a gap overhead, And so the window is closed. That's what the Japanese, by the way, Japanese call gap closes closing the window. All right, what about this one? Now, this one's a little easier. This one's a little easier. Go ahead, type in what you think is going to happen next. And, oh, let's add another element here. Yeah, and why? Why? Pretend that you're, because, you know, if you just guess what's going to happen next, up, down, that's 50-50. But to really impress your friends and family today, tell them why it's going to do what it's going to do. Pretend that you're in interviewing at Goldman Sachs, okay? And the head trader of Goldman Sachs gives you this quiz. Well, he doesn't care if you say up or down because he's got a 50-50 chance. He wants to be impressed on your explanation. Do you know the logic of why this would happen? What's the market logic behind it as plotted on the map of mass psychology we call a chart? All right, we're getting good one, good one, good. All right, so good Neil, good Mark, good Mari, good Mark. Yep, I agree. Yep, Alejandro, good. Good Gurinder. Now, see, now we're cooking with butane. Now everybody's got it right. So yeah, double top, I agree. Again, it doesn't have to go right up to this very top to be a double top, right? The value of the market is found in the real bodies. This is the agreed upon value by the masses in the marketplace. So it gets very close to it. And then, right, wide range bar, and dramatically engulfing it, closing near the low, and excellent. Wow, good. I love it, love it, love it. Guys are doing great. Okay, and by the way, that's what happened. So look at all the money you would have made. And by the way, you would have been hired by Goldman Sachs, starting salary $1 million a year. Okay, plus commissions on your trading wins, which obviously you would do very well with. Okay, let's do another quiz. This is getting exciting. All right, we're adding more stuff as we go along. You might notice we're adding more and more and more elements, more pieces of evidence. I like to call it pieces of evidence because to me, when I'm trading and putting together almost like a legal case, all right, you get one piece of evidence, that's fine. But then another. The more pieces of evidence that we have, the better, right? The higher, again, back to probabilities, the higher the probability of the trade. So, okay, second quiz in the Goldman Sachs interview is this one. So again, what's going to happen next? And the magic question, and why? Explain it to me. Let's see if you want this job. Let's see if you can actually explain it. Let's see if you know what you're talking about. All right. So let's see what kind of answers we have here. Go ahead and type it in now. Yes, that's right, Neil. Plus, top dog trading admiration points, 100%. That's even more important. Let's see. Yeah, very good, Mari. Bullish because big green wide range bar. Wow, you're even coming up with abbreviations for me. I like that. WRB. WRB. I'm going to call it that from now on. Thank you for that. That's awesome. Alejandro. By the way, I've always loved the name Alejandro. You know, Lady Gaga's song Alejandro. I love that one. Anyway, the price is extended, but probably goes down because it's in general downtrend, lower highs. Okay, excellent. Neil probably will go up with good strength and closing near the high. Ooh, so Alejandro and Neil are taking the opposite sides of the same trade here. Mark going up, made a new high and closed on the high. Grinder will come down. Okay, so that's awesome. You see what we're experiencing here? We're experiencing, and isn't this awesome? Wouldn't it be cool if when you trade, you could hear the thought process of the person on the other side of your trade? Wouldn't that be fun? That'd be really interesting. That's kind of what we're doing right now. You're hearing, we got people saying go long, other people saying short, people saying it's going to go up, people saying it's going to go down, and you're hearing now the thought process of the why that they think up or down. I think that'd be fascinating. They should do that. Some exchange should come out with this where they put brain nodes. What do you call this thing? I don't know. Some kind of nodes on people's heads where it reads their minds and then translates it into words, and you can audibly hear the thoughts on the other side of your trade. And then you could say, oh, well, this person is willing to short the trade here. I want to go long. They want to go short because of this reason, and you hear their reasoning, and then you make your decision. Yeah, somebody come out with that technology. That's a billion-dollar idea for you right there, if you can do that. Okay, anyway, here's what happened. Okay, it went up. So, boom. Now, let's talk about the why. So again, if we go back, it looked like this. I didn't draw a resistance line because the market doesn't draw resistance lines for us. We have to do that ourselves, right? So we're looking at a naked chart. So the resistance line, now that we see it, and I've scaled it a little differently, what happened was wide range bar from high to low, closed near the high, and now we're adding another element. It closed above resistance. So now we've got a third thing to our analysis of the logic of price bars. You know, it's interesting. You look at this one, this is almost an inverse bar to it. Wide range bar, red closes near the low, but it closed right at support, right at this low of support, and therefore it didn't go down. Went, tested a little bit, rejected that, and then came back up. And then this one went through with impunity into infinity and beyond. And by the way, if you get a question wrong, don't feel bad. Don't feel embarrassed. I'd feel bad if everybody got all the answers right, because then I'd feel bad that you weren't learning anything, that I wasn't bringing anything new to the table. I want you to miss some. You should want to miss some, because that's why you're here to learn, right? In fact, if anybody gets anything wrong, I want you to go to the nearest window, fling it open, stick your head out the window, and yell, hip, hip, hooray, I learned something today. Okay, do that. I'm going to open my window so I can hear somebody do that. All right. All right, so we've talked about price logic. I know. Yeah, I can be a little silly sometimes. But why not have fun while we're learning something serious, right? That's Top Dog Trading culture. By the way, here at Top Dog Trading, that is an integral part of our culture. Is we like to have a good time and make silly jokes, and so if you like that, great. If you don't, that's cool too. First, not for everybody. I get it. It's awesome. But anyway, that's our culture. So now, let's take it to the next level. So we've got, just to review, range of the bar from high to low, where the close is relative to the high and low, including rejection of value bars. Okay, where the close is relative to support resistance. That's step 3. Step 4 now that we're going to add to our list of analyzing price action is, what is the volume of the bar? All right, how many shares, contracts, lots were traded during that bar? That is very, very, very important. So volume logic we use with what I call the 5 energies. So now, with regard to volume, there are also some important distinctions. I'd encourage you to write these down. Large volume versus small volume. That's the obvious one, right? Did it have a big volume spike underneath that price bar, or was the volume low underneath that price bar? And then there's another distinction within that. You want enough volume to show that, yep, there's aggressive buying coming in, but not too much volume. If you get too much volume, it's usually going to be a blow off top. Usually big, 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 huge volume spikes, depending on where they come in the price action map, but they'll often be accompanied by an exhaustion and put in a high or a low. And we don't want just large volume. Again, distinctions. We want smart volume. So just having a lot of volume accompanying a market move is not really enough. Again, dollars are in the details. Dollars are in the details. The money is in the minutia. Wow, that's a new one. I just made that up. Money is in the minutia. So we want professional participation, and that's because we want to be trading. Well, if you want to be a professional, you got to be trading with the professionals. And we don't want to trade with the retailers because, well, we all know 90% of retail traders lose money. So if you trade with them, you're going to get what they get, which is losses. None of us want that. So how do we do it? How? Now, I'm going to give you a very, 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 very powerful tool. All right, so I really pay attention to this. Now we're getting into the advanced part of my presentation. The last 20 minutes, we're get into advanced stuff. Ready? Oh, thanks, Neil. Electrodes. Oh, yeah, forgot to look at this. So yeah, electrodes. Yep, there you go. See, I never said that I had a good vocabulary. You know, most people don't know this, but English is actually my second language. Did you know that? You didn't? Yeah. The problem is I don't have a first language, so it makes it really tough to communicate. But yes, I'm going to make T-shirts of that, Neil, and you and I, we can sell them. Okay. Anyway, back to serious stuff. How do you know? Here's a question that we're going to answer. How do you know what the professionals are doing, what the whales are doing, so that you can follow them? And we're going to use the tool that we're going to use for this is a time and sales window. You see it right up there, time and sales. So some trading platforms have this, by the way, some don't. Most of them do that I've seen. And you just ask your trading platform, you know, contact their support team and just ask, hey, or look up on their support website and just find out, do they offer a time and sales window? So it's pretty common. This is not an unusual tool, by the way. So it's very, very common actually. So this one's with TradeStation, as you can see up here. I'll show on a couple different trading platforms. And now here's what it does. It plots a it's kind of like an Excel spreadsheet, but it scrolls. So you got 4 columns here. The time, that's your timestamp. And then type, and then price, and then size. So at 12:59 and well, it's actually 12:59 and 58 seconds, there was a trade. Now, you might say, well, of course there was a trade, but in most of these, what they will do in most of these time and sales windows, they will also plot the bids and the asks. And I don't want to see the bids and the asks. So what you do is you go into the settings of the time and sales window and you uncheck the box for bid, you uncheck the box for ask, and it won't show those. For our purposes here today, I don't want to see them. By the way, this is different. This is very different than a level 2 or a level 3 window. Okay, those can be used as well. And if I use a level 2 or 3, which by the way, level 2 is pretty useless. If you're going to be a tape reader, you'd want to use level 3 for sure. And it does cost money to have level 3, but it can be worth it if you want to add the that style of trading of being kind of a tape reader to your trading. That's where you get the real advantage. And in that case, I do want to see the bids and asks on the level 3. Then I do. But for time and sales, I don't. And the reason I don't is because I just want to see here where money is actually spent, where these professional traders have actually let their money go out into the wild marketplace, right? Because actions speak louder than words. A bid and an ask, that's words. They're saying, yeah, if the price comes down to this level, I'll buy it. Well, you don't know if they will or not, because they can pull that order before the price gets hit. So not as trustworthy. What I do trust is when these people actually put their money into the market, put their money where their mouth is, and their money has left their account. Now they're serious. Okay, they're committed. So that's what I want to see. They're committed orders. So that's why we only want to see trades here, all right? And then the price at which the trade was executed, and then the size. This means the number we're looking at NASDAQ 100 here, the futures. So these are contracts, so 20 contracts. Now again, I'm going to go into that window and I'm going to edit it. And I'm going to, again, each one's a little different as to how it's set up, the parameters and the inputs, but anyway, you just want to make it, in this case, I made it so that I'm not going to see anything less than 20 contracts. Okay, so as you'll see, there's nothing less than 20. Well, if I don't edit this column, it'll show every single trade where 1 contract went through, 2 contracts through. I don't want to see those. Because remember, our purpose, the whole reason we're using this is to see where the big money traders are trading, what they are doing. So I'm filtering out all the small money traders, the people who don't have account sizes big enough to trade 20 contracts. You got to have a pretty good size account to trade 20 contracts, right? So that's the reasoning. Now, one last thing on this, just so that in case people don't know, each one of these rows is a single trade. So unlike a level 3, this is not bunched together where there could be a whole bunch of orders in the same row. No, this is one person or one algo trading, one trade, one person. Okay, we'll just kind of put it that way, because it could be an algo or whatever, but it's one trade. It's not 20 people all putting in a trade here, and that's why you got 20. So that's why we know, okay, these are people who have large trading accounts. All right. Okay, let's go to the next slide. Now, there's something really cool that some trading platforms have. So I'm going to throw this in case yours does. And it's an indicator called block trades. It actually might be called different things on different trading platforms. On TradeStation, it's called block trades. And so here's how we have a typical chart. And down here, you would have your volume, right? Except look, we don't have volume bars under every price bar. Why is that? It's because the block trade indicator is only going to plot the volume bars under price bars that have, and again, you can set this to whatever parameters you want, but in this one, it's set to 20 contracts or more. So now it's nice because I can see right on the chart in relation to the price action where those big money orders are coming. And there's something interesting here. Well, side note, there's a lot of people out there who say it's hard to catch the bottom and it's hard to catch the top, so you should just take the middle out of a trend. I'm going to tell you the problem with that. The problem with it is that you don't know what the middle of a trend is going to be until it's over. So you enter on the hard edge of the screen thinking, oh, everything's confirmed. We got higher highs, higher lows, whatever. Okay, well, that's what you had. And then now you're in your mind again, have forward-thinking bias because you've got a model in your imagination that we've started a trend and therefore it's going to continue. You don't know that. None of us know that. And so professional traders, look, here's mapped for you. Where are the professional traders getting in? They're getting in at the bottom. And then where do they get out? They get out at the top. They're not coming in the middle. And this is a general rule of trading. Again, professional traders, we are always in before amateurs. We are taking trades that to an amateur would seem too risky, but it's not. And it has to do with, well, you know the old saying, buy the rumor, sell the news, right? We've all heard that probably. And if you haven't, it's a good one to hear. Buy the rumor, sell the news. And that's about, well, news, news items, economic reports, that kind of stuff. Okay, but that saying also applies to technical analysis in this sense. The news of technical analysis would be when everything's confirmed. Okay, we got a higher high, we got a higher low, we got a trend. Okay, that's the news. Now everybody sees it. That's too late to take the trade. The deal's done. Professional traders, we're buying the rumor of technical analysis patterns, and we're selling the news of technical analysis patterns. Right, a little extra side note here, but I happen to think about that as I'm looking at this. I'm winging it. I'm throwing a bunch of stuff in there that's just coming to mind as I'm talking here. But this is a great example because you can actually see it in the chart. Okay, let's go to our next slide. Now we're going to take this to the next level of sophistication. Ready for this? And this is how I use it. So if you ask, well, Barry, how do you use this? Right here. I pull up 2 time and sales windows. Now, here we've got one. In this case, I made it, let's see, 10 contracts or more. Right, so I'm only seeing orders with 10 contracts or more over here. On this one, though, look, there's only 1 and 2. So I changed the filter on this one to only show me trades that are 2 contracts or less. So let me ask you a question. I haven't asked you guys a question for a while. Type in, just looking at this. By the way, look, they're both measuring the same time, same prices, 1205.75, 1205.75. Pretty much down the line, 1205.75. All these trades are 1205.75. Got a couple of 0550s here. But point is, these are both going on at the same time. So tell me, Just seeing these two side by side and using good old logic, volume logic in this case, would you rather go long or short? Go ahead and type that in. Go ahead and type that in. Okay, good, Alejandro. Come on, let's get some more. What would you do? Because I think it's pretty intuitive, isn't it? Do I have to tell you? I mean, I'll tell you if you need me to, but I'd love for you to self-discover the truth. Self-discover the truth. That's how I love to teach. So basically the Socratic method, because if I just tell you something, either you won't remember it as well, or you'll question it. Again, talking about psychology, by the way, I do have a psychology background, maybe you can tell. But if people tell you something, we all have this internal thing in our brain that says, well, maybe. We automatically question it. Our brains naturally go toward looking for the exception. It's actually a defense mechanism. It's not bad, but we look for the exception to the rule. But if you self-discover it, then it is 2 tablets handed down from the Heavenly Father. And then people don't question it. So it's a more effective way. Socrates used to teach this way, and I still think it's the best way to teach to help people really, really learn something. Okay, so yeah, go with the flow. Right. So good, thank you. Let's see here. Alejandro, Gurinder, Martin, Mark, Neil, excellent. So thank you everybody, by the way. So yeah, here's the deal. The people going short are the people with small trading accounts, so most likely amateur traders. The people who are buying, buying, they are the people with the bigger trading accounts, so therefore more likely to be the professionals. So the odds are probably better to go ahead and buy. Probably better to go ahead and buy. Go with the flow. Yep, I like it. Follow the whales. I call this, actually, I do have a slogan on this one. I got little silly slogans for everything. Hook your wagon to the whales. So take your money, put it in a little red wagon, tie one end of the rope to the handle of the wagon, tie the other end of the rope to the tail of the whale, and just let your money go with them. Okay, they're the smart money. And whether they're using algos or quants or whatever, great. Use all their tools for free. Just see what they're doing and say, okay, I'll just trust your tools and I'll go with it because I know you guys are professionals for a reason. A professional is someone who makes money doing something. An amateur is someone who, well, does it as a hobby or just hasn't become a professional yet, and they're moving up the scale. Okay, so one last little detail on this. Actually, there's two. So now this one is Ninjatrader. Okay, so I'll show you how it looks on Ninjatrader. Ninjatrader actually has a little extra functionality than TradeStation does with these time and sales windows. By the way, sometimes it's just called TNS. So if you see that, that means time and sales. It just depends how deep you want to get into it. So you can color code on NinjaTrader. So mine's lime instead of green if the buy is filled above the ask. So very aggressive buy, right? Or I've got mine magenta instead of red. Kind of hard to tell the difference there, but there is a little difference. If the sell is below the bid. So again, I aggressive sell, or at least they're getting some slippage. Now, if you look here, okay, we got more green, or we got more red than green, but god dang, we still got, quite a bit of green. So now if we want to say, I mean, hey, here's another level. Sometimes there's people who are wealthy who want to learn to trade. So they come in with big trading accounts. Doesn't mean they're professional traders, just means they got more money than they know what to do with. And so, and so that could be some of these people too. So we've got to understand that, yes, that's a possibility, but it's not going to be, the vast majority of people, but we account for it. And so now we say, well, wait a minute, what about the really, 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 really big money? And so now we can add another column in NinjaTrader, allows you to do this, where it says, okay, now I want another filter, and I'm going to make this filter where there's 50 contracts or more being traded. Now, what about that group, the people with the huge trading accounts? Oh, now those are all red, 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 and even 100 contracts coming through there. So the really big money are all going short. And finally, for people who like to do breakout trading, this could be life-changing for you. The bane of breakout traders is false breakouts, right? So we all are aware of that, and we hate that, and it's a pain in the patootie. So how can we help protect ourselves against that and mitigate that risk? This can work very, very well. Again, adding your block trade indicator here. Now, here we have market going up, down, just kind of chopping for a long time in between this high and low, this value area high and yesterday's low. That's what those are. And then, oh, we got a breakout now. Is it going to be a breakout or is it going to be a fake out? Is it going to follow through or is it going to come back into the range? Well, here is a really good sign that, hey, we've got some big block trades, big money coming in on that breakout. Therefore, more likely to follow through, continue up. There's yesterday's high. It pauses there and continues to infinity and beyond. All right, my friends. Well, that's it. Hey, I have to apologize for something before I finish. I got nothing to sell you. I'm sorry. I know the whole audience is going to turn on me now. What? You didn't bring anything to sell? I didn't. So I don't have anything to sell, but I do have some more free stuff for you. And it tells you right here. So first of all, if you ever want to contact me, feel free, Barry@topdogtrading.com. Don't be shy. I love to talk with traders. Feel free to contact me anytime, any questions you have. I just love helping traders. And I'm going to give you one of my free courses today, a little mini course, but not only a course, I want this course to have real value. And I hope I provided real, solid, detailed value today, something you can take and use. I feel very confident that I did. And I want to continue that. So what I'm going to give you is not just some general little course. I'm actually going to give you a trade strategy that I want you to take and start making money. At Top Dog Trading, this is our model. We don't we're not salespeople here. We're trainers, we're teachers, we're traders, and we think we're comedians. So what I'm going to do here, we like to help people make money before they spend money with us. So I'm going to give you this rubber band trade strategy. It's one of my favorite trade strategies. I still trade it pretty much every day. And it's one of my simplest strategies. It works really well. It has a super high win-loss ratio. Just give it to you for free. Trade it on a demo account or simulator account first. Make it prove itself to you that it really, really, really works. Then, if and when you're ready, start trading it with real money. And then if you decide, oh, dang, Barry's pretty cool, he's making me money, then if you want to buy a full course from me, great. If you don't, great. Either way, you're great. All right, so you're going to get 5 videos in this mini course, interactive quizzes, just like I was doing interaction with you. In our courses, we have interaction built in, so you get feedback loops. And then, oh, also you're going to get in a link to one of my recorded webinars on my cycle indicator. So you'll get my cycle indicator, and we get the full education. It takes about 45 minutes to show you how to set it up on your charts and how to trade it. Get all of that stuff at one place. Just go to topdogtrading.com/free, and it's all there waiting for you right now.
I put that all right into the chat. I put your email in there. I put the link in the chat, so everyone should go take advantage of that. It's all so well done. Thank you so much for being with us today, and hope you'll come back next year.
Well, thank you. I would be happy to.
All right. Well, everybody, like I said, we have the links are in the chat, and you should definitely contact Barry. I happen to know he's very, very, very true about being willing to talk with you and help you get things going. So I don't think it can get any better than that, can it? That's where Barry says nope.
No, can't get any better than that. No,
All
absolutely
right.
impossible. No way. It's the best.
All right. Well, thank you, sir. I really appreciate you coming today. And I'm going to take back the screen and I'm going to bring in our next presenter. What do we think about that?
Sounds good. Thank you so much.
Have a good day. Bye-bye.
Bye-bye.
All right. Wow, wasn't that great? I want to remind you that if you have to leave early or if you're just coming in now, we are going to have a recording available at tradersexclusive.com/archived_webinars. And I want to share with you our next speaker. That would be Simon Jousef coming in from the Trader Institute. He's going to be talking to us about volume profile for scalping and swing trading. So let's see, I've got a little bit of an introduction for him. I know he's here and waiting and can't wait to get going. Simon is the head trader and trading educator for the Trader Institute. He provides day trading signals, market analysis, and education. His first public class was in 2004, and within a very short time, by 2010, he had to switch to online conferencing because of the global demand for what he had to share. Simon focuses his education and training on the core of what moves the markets. We all know it's about buying and selling, so volume or volume pressure is key to understanding the markets. The market makers are the ones who control the moves, and with Simon's dynamic math-based indicators and system, you can see the moves ahead of time. So welcome to Simon. Thank you for coming. I'm going to find you and make you the presenter. Simon, do you like to see the questions or do you like them held until the end?
We'll hold them to the end, please.
Okay. All right. Take it away. I'll mute myself, and thanks for being
Good
here.
afternoon. Thanks very much, Sherry. Good afternoon, everybody. I'm glad that I was able to get my schedule or get my trading in and everything and be free today. Usually, folks, I am in here morning and afternoon with my members in the morning, and then afternoon we close the actual live trade room and we switch to something like this. This is the Telegram. So we have the indices channel, the elite members chat, as you see, oil. We have currencies, metals such as gold and silver, etc. So I'm glad I can spend an hour with you guys. Hopefully, I'll try and I'll benefit you again. Like the previous presenter, I have nothing to sell today. Simply because we don't sell. I'll present to you what we have, and then you will go, if you're interested, you will go to the website. This is the website, thetraderinstitute.com, and get access to a 2-week trial. You will email us, and you will be with us for 2 weeks. Trading education, trading signals, is a complicated thing. It's not an easy thing, and trading itself is not for everybody. My method, my strategy, my personality might not be for everybody. So that's why we give you 2 weeks trial. Should you need another few days or a week extra, we don't mind. The service will include, the free trial will include whatever we offer in the service. The signals, for example, indices, as you see here, oil. I'm looking for the oil to go up to $75, which I'll try and explain the reasons and how we do it, etc. So that's part of it. So today I'll talk about volume profile and market depth and how you can use them in your favor. It's very common to hear the word volume profile, market depth, but some people use it differently. I have a unique method, unique strategy that I use. Hopefully you will like it. On the other hand, you see in most of on most of the pages on my website says 1,000 ticks every month through the trade calls. And that's not an exaggeration, because simply I look for swing trades, and I will show you what we look for. Some swing trades will go for 500 ticks, 600 ticks. Sometimes we'll get 700 ticks, sometimes nothing. Depends on the day. For example, this morning I had nothing. I had a trade call this afternoon and it didn't go well, but that's fine. I get about 75 to 80% accuracy. So if I have 15, 20% uh, what do you call it, loss or stop out ratio, that is part of it. That's fine. So let's move on and see what we could accomplish today with the webinar, and hopefully you'll enjoy it. And as I said, we offered trials. Before you join the trials, of course, we have. I will ask you to access the website. There are a couple of things you need to understand. You go to the About Us, you go to Education, okay? There will be a few videos that free, they're available to you. But the two most important videos you need to watch before you attend the trials is this: the 2-week trial, what should you expect, and clarifying my trade calls. This will give you an idea, because sometimes I would say, okay, I'm looking for the crude to go to 75, but I have not said anything about I'm going long or when. It means I'm waiting for a good price. That's not a trade call. It might go to 75 without me being in it, or without me calling the trade, because I could not find a proper trade. A proper trade call will include an entry, right? An entry, a stop loss, and I have them here, all example timestamped with Telegram. Okay, so these are two very important two videos you need to watch. Another video that is most important, but doesn't matter whether you're coming to the trial or not, is this video called Adult ADD and How It Manifests Itself in Traders. And that is done for us by Dr. Kenneth Reed back in 2014. It's still valid. It's still a very good video. And if you watch it, you will do yourself a favor, because it not only touches your trading behavior, but your behavior in general. Some of you will benefit from it in their day-to-day activities, dealing with their family, etc., friends. So it is a very good video, and I highly recommend it. And we have other videos that I could, you could also enjoy. Moving along. When I started back in early 2000s, soon after, I realized that the market is basically a game of numbers. If you know who's buying, who's selling, or number of buyers versus number of sellers, similar to the previous presenter, I believe his name was Barry, he talked about pressure, etc. It is very important to acknowledge, not to be in the dark. So I started with something called the tape, and that tape, which is the bid and ask ladder, it was good. I liked it. I developed many things out of it, such as end of buying, end of selling, different indicators. One of the indicators was the price magnet indicator, which is until now, of course, it's been enhanced, and we still use it until now. It's not the same. We don't look at the bid and ask ladder, because we simplify it to just to show us what we need to see. All right. So basically, the way we deal with things, these are the charts. For example, I stopped the connection, so the charts are not connected, just to conserve energy on the computer for this webinar, which is not a big deal. I'll connect them later. But these are the charts, and most of traders will have support and resistance. Of course, it is important to know your support versus your resistance. Some of you will use different indicators, such as Fibonaccis, RCIs, channels, trend lines, MACDs, etc. If you are not looking into the volume that is inside the market, these indicators most likely are 50-50 at best. And I will possibly give you some examples too. And comes from this. If you see the testimonial from John, this is a long time ago. He's been with me for many years. Once he says, when you are trading and watching your normal charts with lagging indicators, often the market will reach a point where it does something you just can't understand or predict. Using volume profile, the way Simon does, gives you a window to otherwise hidden currents that drive all markets. Okay, and he says, quit reacting to the markets, get the edge and use the volume profile, because that will give you ahead of time anticipation, what to anticipate, where the market is going, and what is your best execution, right? We do look at, if I go back to my charts, show you, we do look at, for example, ES, this is the daily. We do look at the indices, RTY, YM, crude, and nat gas, gold. These are the metals, silver, and then the currencies. Of course, I have more currencies on the side. These are currencies futures and also currencies spot, forex, the pairs. For example, pound US, right? Pound US here, and we have euro US, for example, right? So we look at multiple instruments. Why do we need to look at multiple instruments, folks? Because it's logical. You're capable of trading. So why not apply it to different instruments where you could maybe focus on the instrument that are giving you best levels, best entry, safer trades for that day. You don't have to get stuck with something that is dangerous simply because you don't like to trade, let's say, the crude. You just like to trade the NASDAQ, and the NASDAQ is just completely not given anything. It's just choppy all day, right? So the method called ACE: anticipate, confirm, execute. If I don't anticipate the market's move, and I'm talking about, in this case, a little bit of a swing trade or bigger moves. Scalping is up and down, and you can do scalping long or short, very small. But if we don't anticipate the market's next move or next direction or next target, you should not be looking into a trade. You have to anticipate the market's move. You have to anticipate the next move. It is very important. And then confirmation. How do you know the market will honor your entry or will go most likely in your favor? As I said, we do, when I call trades, my winning ratio or accuracy is about 75 to 80% accurate. Why? Because I would choose the level, I will wait for the market to touch the level, and then I will wait for the market to confirm. There are different ways. So you basically accumulate the things that will work in your favor before you execute the trade. Now, let's talk about what helped me. What is the instrument, or what is the one thing that helps me anticipate the market's move? Volume profile. If you look at the charts, let's focus on crude. This is the crude, a very long-term chart. Let's look at maybe daily here. No, one day here. The market is now stalled. I mean, the charts are stalled. They don't move because I disconnected the charts. But if you look at the crude on the right-hand side, you see the volume profile, and this volume profile, it might look sharp and the edges, as you see here. You can sharpen it. It's designed for us. We designed this a while back, and students or members enjoy it as a full package. It's for Sierra charts. There's a similar one we have for Ninjatrader 7 in the past. I don't have Ninjatrader 8 indicators, and I will explain why I don't have Ninjatrader indicators in my next indicator that I'll explain. If you look at the volume profile, you see how you can also smoothen the edges. You see how smooth they are. And if I add more candles or more charts into this window, you see And if I remove remove the candles, see how the volume profile reads whatever you have on the screen. This is where you could basically anticipate the market. How? By looking at these portions of the volume profile. If you expand the charts, these portions of the volume profile, they mean every single portion will mean something. Of course, this is on a daily chart, and that means it's a bigger view. You can always go back to the 60-minute chart and look at a more decisive level. But here's a level that you know it is continuation. We call it the continuation zone. From here to here, this is a level. This is one level. This is continuation. C for continuation, and I don't like this color for change the color. Changing the color for the pen. Choose color. We make it black. Okay. Here, this is a zone. So technically, if the market gets into the zone, let's say going up, don't go against it. This is a continuation zone, C. This is another zone that it looks confused, but it's a zone nevertheless. We call these ascending descending levels. Once the market gets into it, don't get involved. Don't try and go against it. But if you catch it long, then yeah, it might continue up in your favor. Now, the thing is, between the two zones, between the connection between the two zones, there's always a zone that is called rejection, R, rejection. Same goes with this level. Okay, same goes with this level. As you see, it's not very hard because there are other things that will be involved in this to make it easier for you. And same thing goes with this level, for example. If you see it clearly, I don't know, this is like light green. And if you don't see it, you could basically, depending on your vision, you can right click, go to studies, go to volume profile, and change the colors. Let's say you don't see the light blue clearly, you make it dark. You make it a bit darker so you can see it. You see now it's a bit darker. You see the blue is a bit darker where you can see it. Okay, so that is in the volume profile. Same applies to all the other small charts. So when I want to anticipate, for example, I'm anticipating the crude to go up to 75, right? Why am I anticipating the crude to go to 75? First of all, I have a major attraction level right here. You see this? This is a major attraction level. What is this major attraction level? This is 1 out of 50. This is the biggest one out of 50 levels. And if I look at a 60-minute chart, you will see more of these magenta lines. Just give me a second. It's not easy to keep erasing those. Oh, sorry. Got it. So you see more magenta lines. Why do I see more magenta lines here than on a daily chart? On the 60-minute chart, if I right click and go to my studies, SAL indicator, which is these magenta lines, reads in a way markets historical and current market depth. It tells me at which level you have more buyers or more entries or more hidden volume. And in this chart, I have up to 20. What does that mean? Up to 20. What does that mean? Meaning, on this chart, I have 20 levels. 1, 2, 3, 4, 5, up to 20. Okay, and I can put up to 50. That is maximum of levels. So if I get a level, okay, that is, for example, let's choose a number, 1,000 entries. I'm gonna make it more exciting, so don't worry. Then this is the highest. It will be the biggest, the thickest, and the darkest, for example. And then the rest will be according to the 1,000. Now another entry comes for 1,002 contracts. This is no longer the biggest. For example, it's going to be here, and this is no longer the biggest. It's gone, but it's not going to disappear. Since I have 20, maximum 20 lines, it will take out the least one, which is basically, for example, it's 100. It will take it out. It will disappear. So that's in a simple way. That's why if you want to know more about this indicator and all the indicators, you go to the website and you go to the education, and there is a video that I made called TTI main indicators that contribute to our success. Okay, that is part of the free education. Meanwhile, on the daily, I put two of the highest levels in the market depth that gives me an idea where the market should go. And I have examples over and over. I told the students the market is going to go, for example, NASDAQ. NASDAQ is being sitting I've been telling my members to NASDAQ we have it coming to 16,000. Sooner or later it's going to come back to 16,000. I don't know where it went this morning. Let me double check. But 16,000 was an entry that it popped up for us a long time ago, right? And it gave us that idea. And eventually it will go up to the highs. But again, this is what I mean by, folks, anticipate, confirm, and execute. Now, let me give you an example of what most traders do in terms of using anticipate, confirm, execute, or using trading versus how we do it. And then I will go into a video. I will show you a recording of, for example, one of the trades that we've done recently. Let me just get a sip of water, please. Okay, and then we will continue. Let's assume you're looking at a market and the market is going up. You're looking for a long. Okay. Let's assume that you are trading Fibonacci's, one of the well-known indicators that everybody uses. And you have levels of Fibonacci. One of them is here, the other one is here, the other one is here, and the other one is here. So you want to grab a long, the market comes back down, you decide to, you know what, let me take it long. Now, the way I call the trades, the way the system goes with me, with my members, we look at 3 contracts. Now you can trade 3 mini contracts, 3 micro contracts, 3 full contracts, 6 multiples of 3. It's up to you. But the 3 is important. Why? Because we always try and take target 1 at the first hiccup that is against us, and then we keep the runner going. But I'll explain. All right. So 3 contracts. Now, let's say you trade 2 contracts. It doesn't matter. This is an example. You take it long from here. It doesn't even budge. It just goes against you. You have a maybe 20 or 15 tick stop out. It stops you out. It comes back down to the 50%. You say, okay, 50%. I like it. Let me take it. You take it, and then goes back down against you. You stop out. You stopped out twice, and then goes back up from here. You say, no, 50% is holding. The market just maybe poked it, and then it's going to hold. So it goes back up here. You take it again. Just it comes back down, stops you out again, comes down here, and then from here goes up, and you don't want to trade it again because you got stopped out a couple of times, maybe more, right? But then it continues up. So your view on the long was correct. Maybe you were using trend line, higher highs, higher lows, whatever the case might be, right? Now, when you traded this, did you know your stop loss ahead of time, or you are using random stops? You don't know. I mean, not you, don't take anything personal. I'm just talking in general. When you took the second trade, did you take it with a stop? You knew your stop. Do you have something called smart stops? You know where the stop loss is? No. In most cases, most people don't. They do random stops. Again, not everybody, but some are more advanced than others, and some are really happy with their strategy. That's absolutely fine. If you want to keep your strategy and learn to add the volume profile, it will probably make it stronger, because volume profile is what the market is giving you, the levels. Now, let me show you, when you add volume profile to this, how does this work? Same thing. Market is up. Now I'm looking for a long. But when the market was moving historically, it gave me levels. One of them was all the way here. This is the level. Maybe more, maybe here. And the other one was here. Remember, I showed you on the volume profile on my charts. I showed you this. I showed you the volume profile, the um, continuation zones versus rejection zones, and every color, every structure means something. So same thing here. Where is it here? So now I have zones. One of them is continuation. This one is continuation. In between, you have something called a rejection zone. Rejection R. So market goes down, retraces down. This was your first Fibonacci level. Do you think this is valid to be taken? Because it's inside a continuation zone. I mentioned, if it gets into a continuation zone, don't touch it. Don't go against it. Now, the next level comes back down here. Is it valid? It's better than the first one because it dipped lower, but still it's not valid. Let's assume, and it happens to me, you decided to take it from here. You found something within the volume profile here to help you maybe start a trade long. Where is your stop loss? Remember, you're trading 3 contracts, right? 3 contracts. Where is your stop loss? Is your stop loss going to be anywhere within the volume, within this continuation zone? It shouldn't be, because it's fragile. The market most likely will take it. What did I do? Okay, so I will skip it. I'm not going to touch it. The market comes down here to the rejection zone. This is where now I'm ready to take the trade. Now, are you going to take it from here? I still don't know, because now I'm waiting for, and we did anticipation. So we anticipated the market to go long from here, because this is the support level that we have right here. This is the support level. What's next? The next is to wait for confirmation. Your confirmation is key. And that confirmation comes from, as I mentioned before, if I show you the charts, remember we talked about these magenta lines. Let's look at the crude. Magenta lines on a, let's say, 987 tick chart or 1597 tick chart. Do you see these magenta lines? These magenta lines, folks, are not something that are random. They will show up when you have volume coming in from buyers and sellers. You see some of them are thin. This is thin. This is thicker. This is thicker. You see that? You can change also the colors of them if you want. If you go to studies, attraction level here, you can change the colors. You can change the number. You can change the thickness, right? But you can go up to 50. You don't need more than 50 because it's going to be a mess. It's very, very active indicator. Some of them will flash. Some of them will show up. Okay, so these are important for me to monitor, to watch. Sometimes they will be sitting here. There will be a magenta line sitting actually here for me. Often will be sitting here for that long, waiting for me to basically call the trade. Now that is confirmed. Now, We confirm the trade. Third is execution. Execution includes the ability to execute the trade when you see the confirmation. It doesn't have to be like millisecond execution, but as long as this area holds within a few ticks, you can take it. But most importantly is your stop. How many of us trade without knowing exactly where the stop loss is or using random stops? When I call my trades, folks, let me see an example. For example, just give me an example. This is look, this is an example. Stops at 2260 if I call it long. That's on silver. So folks, I have not even called it long yet. You understand? This was, when was this? November 29th, basically 2 days ago. I said silver is long. If I call it long, my stop loss will be 2260. So I'm calling the stop loss ahead of my long call. So I told my members, folks, this is my stop loss right here. Why is this my stop loss and not this one? Simply because if the red area, the red stop loss, which is about into this continuation zone, remember this is a continuation zone, right? If it touched, there's no holding back. It's going to come back down and take this one too. So why do you want to risk 50 ticks while you can risk 20 ticks? Okay, now I call the trade, and the silver trade went very nicely in favor first thing. But then, you know, where is my first target? You have two ways of securing first target, or sorry, securing the trade by taking first target. Sometimes there's no hiccups in this continuation zone against us. So the market will go fast, but there's no hiccups to show me that, you know, there's a first target here. Like hiccups are resistance, for example, against this long. But if I find a hiccup here, I will tell everybody, you know what, take your first target here, because this might push it lower. Now, let's say you took on the 3 contracts, right? First target 1 is on 2 contracts. That's part of the strategy, part of the technique. You can use it, you can learn it, and you can also adapt your own strategy to that. Doesn't matter. So if I have, let's say, 25 ticks first target, ticks, that means I grabbed already 50 ticks. And my stop loss is about maybe 20 ticks risk or 25 ticks. So even if the runner gets stopped out, I'm still making some money. However, I'm going to move my stop loss, not immediately. Of course, it's your choice to move it according to what you like. But for me to teach you, or as a teaching process, I will wait for the market to go up in a way that I will see a reason for the market not to come back down. And I'll move my stop loss to break even and then chase it with we call them smart stops. Okay, so far so good. It is very important to anticipate, to confirm, and execute. Now, a couple of things that I do emphasize on. First of all, if I get stopped out, I don't chase. And the example is this crude this afternoon. Just before I got into this session, crude stopped me out, and I was surprised. And I'm thinking maybe because of the dip that is happening in the market, the whole market is crashing, because I was long on the crude, was crashing at that time. Maybe it affected the crude, but I was surprised. However, it got stopped out, and I know the crude is going to go up to 75. Right now, the crude is, where is the crude here on the side? I see it live. It is at 65.80 area, which is 65.80 area is, well, basically a little bit lower than this here, 65 area here. And I know it's going up to 75. So what does that mean, that I have to just to take it randomly just for me to avoid the stop out? No, no, folks, no. I have a high ratio possibility of winning or getting good trades. So why don't I wait? So one thing is I don't chase, never chase. If I miss a trade, I'm not gonna chase it. I'll have to wait for another reasonable entry before I take it or call it to the members. I never chase. If the market doesn't touch my entry level, I don't chase it. And here's an example. You know, the ES today dropped. This is the ES, the E-mini S&P. It dropped here. E-mini S&P dropped, big one. If I show you my E-mini S&P resistance, I said it to everybody, and this is today. This was at 11:14 a.m. I said ES possible short now, and that was, if I look at the hourly, that was right here, folks, the top of the move, right here. It did not, actually my level was just above it, a few ticks above it. It did not touch my level, and it started dropping, and I never touched it. Okay, 11. If we look at your charts at 11:14 a.m. today, Eastern time, you will see the top of the day. But yet I did not bother with it, so I let it go. So that is important. I do this mainly because of the live trading room. I want my members, especially the newer ones, to learn, to understand. It's not just a random thing. You have to wait. You have to have rules. You have to abide by them, and you don't count your success in one trade, right? No, it's a whole month. Let me show you an example. Hopefully this will make a little bit of sense. This is from, I think, a few days ago. We had, let me just make sure everybody can see this. Okay, very good. This is, as you see, this is a recording from a few days ago. With this video, and I will explain it, you will understand better what do we do and how we do it. This is, besides the live trading room, we also have the trade calls on this on the Telegram channel. Notice that this was November 21st, actually. Just I found this video, I thought I'll share it with you. I said I would like to see crude opening at 74.80 area to be able to catch it long. So far, so good. You know where the crude is now? This is Sunday evening before the open. 75.68. I want the crude to open at 74.80. So I'm expecting the crude either to open with a gap or come back down fast to 74.80. For what? For me to call it long. So at this stage, remember we talked about anticipate, confirm, execute. At this stage, I'm anticipating a long from 74.80. Look at where my line is, 74.80. Okay? And sure enough, the market opens. See that I'm typing for my members. I said market open. The market, Asian market opens up. Look, that's it, 74.80, touched. I called it CL. Look at I'm calling it. I said CL possible long at 6 p.m. exactly, which is the opening. And then I said CL long, crude long at 74.80 area or better. Done. And then stop at 74.60. 74.60. If you caught it at 74.80, 75, 74.95, it's all good because I'm looking for a big swing, right? Just like anticipated. 74.80 worked to the tick. And then the market goes in favor, tick T1 at 75.40. So I'm looking at, regardless of your entry, even if you had a bad entry, let's say you got it at 75, you're looking at 40 ticks at least for the first target. 40 ticks at 2 contracts, that is 80 ticks. So you are up 80 ticks ahead of, just after the start of the trading session. If you get stopped out on the runner, let's say you give back 50 ticks or 40 ticks, you're still making some ticks. So it's a free runner which takes out all the pressure against you, right? And then we move on, look at that, and then I give them more information. CL targeting 78 or 79. By the way, CL was supposed to go to 78, 79. Last week something happened where they discovered something about the virus, whatever, and they crashed the market. A lot of politics, but I was expecting 78 and 79 to hit. The crude went up about 500 ticks, 400 ticks, but I'll show you what happened. Look, 75. I'm going. Okay, hold on. Here, watch this. Watch what I type here. I said to my members, I said to them, if anybody missed 74.80 because it was fast, whomever is not in, okay? I said, if you want to get another entry in case you missed it, 6 minutes into the call, I said, try 75 or lower. And there it comes to 75, and then boom. So I did not only call the trade once, I called a re-entry for anybody who missed it. And I still told them to take first target at 75.40, move stop loss at 74.60. This is a swing. Okay, so I see some students were waiting for me for that session. I don't trade Asian session often, but sometimes when we have swings like today, the market crashed, and I would like to see in the Asian session what's going to happen. We might catch a swing long. So there's, and you see students typing. This is the channel where students type. They talk to each other, they talk to me, and also I'm available for private chats if anybody wants to chat. And then the market goes up from 74.80, 70. It's already, it went 100 ticks. We see 76, 76.80. And then at one point it goes higher and higher and higher. And I say, I'm moving the stop, unlocking 50 ticks on the runner. It goes higher and higher. Watch the other thing. Look, nat gas at the same time, after at the same day, November 22nd, which was the next day, I called nat gas long. Nat gas long was from the bottom here all the way to $5. That was like maybe 300 tick move along. I called it long. See that? Same thing. So nat gas goes to $5 after, just for you to see the examples of what we do here. Okay, just quick examples. This is the call that I made on nat gas from $4.78 all the way to $5. That was a massive move on nat gas. And finally targeting $5, and it gets hit after. And then I tell them to move stops. Just for you to see, this is on top of the live trade room that we get 3 days a week, 2 hours a day. And that is designed, the live trade room is designed for me answering questions, showing, especially the newer members, how I do my top-down analysis, how I look at the markets, give them the chance to ask questions as if the members knew where do I find this video, how do I get my charts ready, etc. Okay, and then it goes. Oh, look at this. Sometimes I like to keep my trade for, let's say, 70. I said 78 and 79 on the crude, but look what I told my members. I said, I see resistance at 77. If you want to exit, you have 200 ticks, of course, including the first target and then the entry. So that is 200 ticks, or maybe more, depending on the entry, right? I said, if you want to exit at 77, exit, because I see resistance. I clearly told them, and I showed you what I mean by resistance and support throughout my, the 40 prior minutes. I told you how I look at support and resistance, all related to volume profile. And then I do metal. Look at this, gold. I called a trade on gold. See, it's all time stamped and everything. So gold was long as well. We took first target. Unfortunately, the gold runner was stopped out, so the overall profit was minimal. But these two trades between the Nasdaq, between the crude and the nat gas, we managed, I think, 530 ticks combined, right? And that was a nice start of the week. This is where I say, when we say promise you 1,000 ticks per month, it's not a promise. It's something I put on the website. Usually we go much more than that, providing you follow all the trades, right? And the trial itself will make you see whether you can follow the trades or not. That's why I don't sell anything at this time. I just offer a straightforward trial. You just need to email our sales department for that, okay? And the whole thing goes, and you see, typing currently is up near 200 ticks, and if anybody wants to exit, can exit, okay? So that was an example of how you get trade calls. Of course, once you join the trial, if I go back to the website, this is the website, thetraderinstitute.com. Let me go back and here, and I will post this link into the chat for everybody. Organizers. No, maybe Sherry can post it to everybody in the chat. If she can do that, that'll be great. And now you click on the 2-week. Thank you so much. Appreciate it, Sherry. So if you click on the 2-week trial, you email sales@thetraderinstitute.com, and then just continue. There's a lot on the website to see, to learn. There's a reason. Today, for example, I had a member whose trial was finished. Let me just read. The timing is not good for him, but he says something very, very kind. He says, I like your chat rooms. I like your style. I like your calls. I think I'm going to wait for now, and I'll buy later. I have some major, what I don't want to get details, but he says, thank you so much for following up with me. I can tell you care about your students. Here's why, folks. If my students are not successful, are not getting my full attention, I will not be successful in what I do, right? That's part of me. And plus, the personality. If I find a trade call, I'll call it. Even if I am not in it, I will call it. Even if I'm in it and there's another re-entry, I will call it. If I find a reason not to call a trade and members are wanting to get in, I will tell them, no, this is my opinion. It's dangerous. Okay? So the website, please go to the website. Now, once you join us as a let's say full member, you have 6 levels of education besides the live trading room links. For example, level 1 itself, it deals with every single indicator that you are getting on Sierra charts. It tells you details, videos, how to use it, how to install it, what's the purpose of it. And then you have, for example, level 3, you have advanced profile, for example. Advanced profile it tells you volume profile, how it works, and then video. Some of the videos are old, 5, 6 years, 3 years, but a lot of them are new. This system did not change. This is many years of education that I'm presenting to you. Plus, I'm always available to answer questions, whether on a private chat or on a student's chat, which is on Telegram here. Telegram, as I mentioned before, we have all these channels for you. Furthermore, if you go to the website, on the website there is our YouTube channel. If you scroll to the bottom, YouTube channel, a lot of nice videos. Please make sure to follow us on YouTube. I bet you will enjoy many of the videos. And now I have about 9 minutes. Let me see if I have anything else to add. Otherwise, I will take questions. So these are some videos. I will take questions while I'm showing this. I can't see the questions. Maybe they are somewhere. The questions tab is not visible to me unless it's somewhere. No. Sherry, if anybody have questions, maybe you could read them for me. But meanwhile, this is an old.
I'm going to add. So know if you have, are not sure, you're going to try that. Let's just see. All right.
Second.
So Simon, if you pop out the questions
Got it. Yes.
grid, can you see Bando said, are you going to send a recorded webinar?
Got it. I got it. But which ones are mine?
All right, and I'll tell him yes, we are.
Of course, I got the questions, Sherry.
Okay.
Are you going to be sending the recorded webinar? Yes. I don't have anything that is.
All right, we just had a couple come in.
Okay.
Cami says, how long will it take to master the strategy?
Cami, you're a new trial member. Thank you. It depends on how active you are. It could take a month. It could take 6 months. But I noticed students or members who actually ask questions and they take their time. Time or the time period where you can learn this, it's not a big issue as long as you learn it properly, right? Is trading volume as same as? No, it's not the same as order book. It's not the same. Cami, I hope that answers the question. Again, some people will take them 3 weeks to go through the videos. Some people will take them 3 months, depending on how much time they can dedicate. This is, the membership that we offer. Often, most people will go for the lifetime membership or the permanent membership, which means they can take their time, right? So there's no rush there. Volume profile, no, it's not the same. Order book is not the same as volume profile. Two different things. This is a picture from Denver, Colorado in the past, I think 2012. The previous picture was in Ontario, somewhere around Mississauga or Brampton, Ontario. This is very old, 2004, and this is from 2006. You see the date. See this? Again, my somehow, some reason, the GoToMeeting is crashing. But I think so far so good. No, it's good. It's good. It's coming back. I have 5 minutes. If anybody has questions, and yes, I believe it will be recorded, right? And then
yes, it is definitely recorded.
Excellent, excellent.
And we get a lot of people coming back to these recordings. I'm just blown away by the number of replays we have.
Beautiful, beautiful. It's just maybe the time of the day where people cannot make it. They just depend on the recording. of this. So folks,
Exactly.
trial is important. I don't know, a lot of you may be not available during the morning for the live trading room, but the trial that we offer, you can see the benefits from the actual trade calls, throughout the day. You can carry your telephone with you, mobile with you, and you can see the trade calls that I'm making, compare them to your charts. So just email us. Let's see if we can qualify you for the trial. By qualifying you, meaning we're not gonna charge you money. We just need to know if you're a real person, and if we can be of benefit to you. Somebody comes with a $300 account that wants to trade 10 cents. That this strategy will hurt him. I'm not here to hurt anybody because it's not beneficial, and I'm sure he's not going to be able to afford, let's say, $1,000, $2,000 membership, even though it's maybe a fraction of what the actual membership is. So what I mean is, if it's reasonable to you, if it is going to be reasonable to us too, right? So when you look at things such as volume profile, here I'm looking at my charts. When you look at something, let me just, no, okay. When you look at volume profile, folks, you don't have to worry about your emotions, because if you get the strategy, uh, uh, you know, if you get the strategy and if you learn it, you will know which level is support, which level is resistance, which level is continuation. So you don't have to trade in between. You set it and forget it. You wait for the trade to come to you. You wait for it. And for example, here's the crude, and believe it or not, I look at crude because I'm a Canadian, so I can trade the crude in two different markets, not only futures market, but I can trade it in the spot market, which is CFD as well. Same thing with the NASDAQ. I can trade the NASDAQ with futures market, and I can trade it as a NAS 100. NAS 100, which is a CFD. These are not available in the States, are available anywhere else in the world. But even if you can't trade them, I use them for levels too, because these instruments don't expire, don't roll over. So their volume profile is more vivid, more clear than futures, especially when it comes to rollover timing. Every 3 months, every now and then they roll over, right? So gold, same thing. And if I go back to the crude, let's see the 75. You see 75 attraction, it remains there, meaning crude is going to 75. I just need to find a proper entry point. And with that, folks, I am done. And I want to make sure that the next presenter will join in time.
I'm so
Thanks.
happy you could be with us.
Thank you so much, Sherry. Always a pleasure to be presenting with you. And all the best, everybody. Thank you.
All the best to you too. I hope you have a wonderful holiday season, and I'm counting on you being with us again next year.
Thank you so much.
Okay, you have a good day. Bye-bye. All right, folks. We're down to the wire. Our next speaker is in the room. It's Marina Villatoro of the Trader Chick, and she's going to be coming to us with becoming a profitable trader, get back to the basics of day trading. And I wanted to let you know that she specializes in helping people day trade with confidence. She's been trading financial markets for years, uses trial and error to gain insight. And when Marina began trading E-mini futures over 8 years ago, she realized that no one was teaching the most important part of trading, the basics, reading and understanding the market language. So it speaks to, that language speaks to us loud and clear. And then if you're able to understand it, truly understand it, it can take your trading to a whole new level. So thank you for being with us, Marina. Let me just go ahead and change over to you. Change presenter. Come on, why is it just looking at me?
Hi, everybody. Can you guys hear me?
I can hear you great. Great to have
Awesome.
you. Thank you so
Hi,
much.
thank you so much for having me again. Oops, hang on a second. Thank you. Hang on, I just gotta get my doggies all set up because every time I start speaking, they know that
They want to get in on the action, right?
it's time for a treat. So they leave me alone for the rest of the presentation.
All right.
Yeah, they're smarter than we think, right? Hi, everybody. So I am just setting myself up here. I don't have access to the questions.
I'm going to give you
Yeah,
access
can
to the
you?
questions right now. Just a second. And there you go. Should have access there now. Can you see them now?
Yeah, I've got it here.
All right, everybody, ask Marina a question.
Okay, hi everybody. So I would love to know, where is everybody from? Because I see quite a few people in the room. So I'd love to know, where are you guys coming from? You could just put it all in here into the question box. I think you all have access to the question box, right? To the chat box. So let me see, where are you guys coming from? Where are you in the world today? Hong Kong, nice. What time is it in Hong Kong right now? I think you're what, 20 hours ahead of us, right? Where else? Where else are you guys from? Or is it just Cami? Cami is the only one here, and I'm gonna be doing a private show.
I think everyone has just kind of forgotten where their microphones are today, or where their keyboard is.
I know. Hello, guys. You guys are here. The whole
Anybody
point of
here?
being here is to be
There we go.
proactive. There's somebody from Michigan, Gurinder. All right, so 2 people. Wow, is this how you guys trade? By stepping away and not listening? Come on, you guys, we're all here, and I love the fact that you guys are here. So I would love to see much more interaction, because for me, I could definitely give a presentation and I'm sure you'll learn something, but it's about the interaction. It's about being proactive. Arizona and Phoenix, wow, nice. We've got 2 people from Arizona. Maybe you guys could meet up. Paul, are you in Phoenix as well? Indiana, awesome. Anybody else? Where else are you guys from? Come on, don't be shy. Let's enjoy the last presentation of the day. So I'm super grateful you guys are here. Florida, Georgia, awesome. Which part of Florida? I go to West Palm Beach every year. Georgia, I love Georgia. I spent lots of time in Athens, Savannah, Atlanta, Southwest Florida. So what is that?
Have you ever heard of Mayaca City?
Alexa, quiet. What's that? Sorry, Sherry, I didn't hear.
I say, have you ever heard of Mayaca City?
No, I haven't. Is that where it is?
Yeah, well, not where Mark is. He's in Fort Myers, but I'm just south of Tampa.
Oh, okay, on the west side as well. Yeah, I love Tampa and St. Pete's. Oh my goodness, so beautiful there. Boston. My brother lived in Boston for 12 years, so we used to visit all the time. All right, guys, well, let's hop in. Discovery Bay, California. That sounds really pretty, actually. I don't know where Discovery Bay is, and I lived in California for over a year, but in Southern California. I don't know if that's part of Southern California. Okay, so like I said, I am here to present for you guys, but I love questions, right? It's all about participation, because that is literally the only way to learn anything. And one thing for sure about day trading or financial market, it is not a spectator's sport, meaning the further out you're sitting and watching, the less you're actually going to achieve. You've got to get out there. You've got to be proactive, okay? So today I am going to be giving you a presentation, but if you have any questions, I would love to hear them. I promise to answer every single question. All right, so let's begin. This is me, Marina, the Trader Chick. There I am. And today I want to go over stuff that you will be surprised that you would think that you would know. And then a lot of times we miss the really important things and skip to going in full on and not realizing why we are not succeeding consistently. So I want to talk about these things because I can guarantee these minor shifts could be enormous, enormous up leveling for you, either in trading, investing, swing trading, whatever you guys are doing, but I can guarantee it will take you to the next level. All right. So what is day trading and why is it not investing? This is a huge thing because sometimes I talk to people and I'm like, I'm a day trader. Oh, so what should I invest in? So I'm going to talk about that because I always say we day trade to invest, right? I want to bust some serious myths about day trading. Also, what to trade. A lot of amateur traders and people who want to trade, they're like, okay, I want to trade forex, crypto, options, futures. It's literally like getting into 4 different trucks or 4 different vehicles and they're driving on 4 different terrains all at the same time, right? So I really want to talk about what to trade. Day trading lingo. You will be surprised how many people don't even know when somebody says I'm going long. They have no idea what that is, and yet they're putting their money into the market. It's like literally getting into a car and me saying, all right, shift from first gear to second gear, and you having no clue, but you're driving. You need to know you need to understand what is being said, otherwise you will be losing money. Also, understanding about brokers, commissions, and platforms. Super important. So many people don't even realize how to use their platforms and are putting money in and not understanding how to get out of a bad trade, how to go into the right trade, simply because they haven't learned about the platforms. Understanding market movements, different patterns, indicators, and the most important thing is indicators and technical analysis. So we're going to be covering all of this today and a little bit more. Okay, but before we do, I want to do a quick intro and fun fact time. Like I said before, I am Marina, the Trader Chick. I'm actually coming to you guys live from Antigua, Guatemala. I am an expat in Guatemala, and these are my 2 favorite little creatures right there. And before I was a day trader, I was actually a fitness instructor and a travel writer. I was one of the very first fitness instructors in Manhattan to be teaching spinning and Pilates. So yes, I'm kind of a veteran and I've been doing it for a while. But the reason why I mainly bring this up is to show that day trading, you do not need to come from a financial, engineering, software background. Anyone can do this. And that's the coolest part of day trading, okay? And I was a travel writer. And the reason why I bring up travel writing is because travel for me is not a luxury, it is a necessity. And I needed something that could go along with that lifestyle because we normally travel 3 to 4 months out of the year. I'm also trilingual. I say this not because like, ooh, how cool is that? Mainly because one thing that I recognize being trilingual is that the market is actually a language in itself. And until you realize that and start to listen to it and read it, it's going to be really hard for you to become successful. I am a Russian refugee from the Soviet Union over 42 years ago. So I was born in the Soviet Union. My mother tongue is Russian, but because I was raised in the US, I speak English. Obviously, that is my main language. But now I've been living almost 20 years in Central America as an expat. I've lived in Costa Rica and now we're living in Guatemala. So I learned Spanish in my later years. I was 28 when I started to really learn Spanish. And that's when I recognized that there's a whole process to learning a new language. So if anybody here has English as a second language or learned a second or third language, you know that it's a process, right? It's a commitment. You have to go through that whole process. And it's the same thing with the markets. And that's how I recognize that the market has its own language as well. Okay, and the fact about day trading, the coolest thing of all, you can literally do it from anywhere. I have one chart. I take my laptop wherever, one chart. That's all I use. And I've also been featured on quite a lot of different summits and events and expos. And I used to do a lot of live shows as well. Obviously, the pandemic kind of came to a halt with that. So I did present quite a lot before. Now, before we start with the presentation, I have a free worksheet that goes along with the presentation, completely free. You could go and get it at makingofaDaytrader.com, makingofaDaytrader.com totally free. You can follow it along, and I literally call it my cheat sheet for trading. Okay, so go there right now. Now, let's begin. What in the world is day trading, and why is it not investing? This is really, really important. Unlike investing, day trading, you do not want to diversify. So if you get anything at all from today's presentation, the most important thing of all will be that it is not to diversify. Okay, you do not want to do too many markets at one time. It's just not going to be good for you. So think of it like this. I don't know if any of you guys have kids. It doesn't matter. You could all relate to this. Imagine your child coming up to you and saying, hey, I want to learn how to play a musical instrument. And you're like, okay, awesome. Which musical instrument do you want to play? And they're like, okay, I want to play the guitar, the drums, the piano, and the violin. And you're looking at them and you're like, well, you got to pick one because they're so different. You're not going to learn anything, right? It's the same exact thing when you're day trading. You cannot trade multiple different instruments and different markets. You will fail. You need to first master the one, and we will talk about the different markets out there for you to really learn how to do it well. So that is so important. You cannot be doing Forex and you cannot be doing stocks at the same time. You are literally driving two different vehicles or learning how to play the keyboards and the harpsichord at the same time. So different, you cannot do it. Okay? The other thing with investors, they actually care about the companies they are investing in. They want to see them grow. If I'm going to be an investor in Apple, I care how the iPhone 13 is going to pan out. If I'm day trading Apple, I could care less because during that day, it doesn't matter what the overall thing is. It's just in that day. And it's usually in that hour or even in the 5 minutes. Okay. And the other thing is, we don't care if the market is going up or if the market is going down. Investors, they stick it out if the market tanks and continues up. But day traders, we could trade as well when the market is going up as when it's going down. Okay, huge difference. All right, now let's bust some of the myths of day trading. First and foremost, I'm sure the second you tell anybody you want to day trade or you're day trading, they're immediately saying to you, oh my God, that must be so risky, it's gambling. Well, again, here's the thing. If you guys hop into a car, you've never ever sat in a car before, and you somehow miraculously turn it on and are able to go, do you really think you're going to be able to stop at a red light if you don't know where the brake is or where the accelerator is or how to even shift it from first gear into second or third gear? You're going to probably burn out the ignition and the transmission, correct? So technically you could say, well, driving is like gambling. Yeah, if you've never heard of a car, never seen in a car and just decide to hop in. That is what a lot of people do because there is no barrier to entry with financial markets. Anybody who has a little bit of money thinks that they could make millions in half a minute, right? I mean, that is literally how it works. And that's why 95% of the people fail. It's not the people that actually learn how to do a strategy and learn and understand what the market is doing. It's the ones that don't. And they're the ones that are giving this a bad name and making it sound like it's risky and gambling, right? The other big misconception is that you need to get started with $25,000. This is only if you want to trade stocks with a margin account. Do you guys understand that? I'm going to talk a lot about margin accounts because I call it loan sharking. You do not need to have a margin account. You can start day trading there's many different markets with $50 and $100. Crypto, you can get started with 10 bucks, right? So you have to understand that process, okay? So you have to understand why it's $25,000 to get started. You do not need that kind of money. You can start with any amount as long as you do not have a margin account. I will talk a little bit more about margin accounts. The other misconception is that you have to be a math whiz or have a financial background. Total misconception, total lie. I have zero math background, zero financial background. I don't care. I don't ever have to deal with numbers because it's all about patterns and technical analysis. I don't have to do anything with numbers. The only thing I have to do with numbers is what is my profit, what is my loss? And that's pretty much anybody can figure that one out, even my 11-year-old son. Okay, so that's nothing to do with it. The other thing is that it's stressful and chaotic. yeah, when we watch movies like Wall Street and there's all these buzzings and everything going on and it looks like this can make anybody completely stressed out and completely chaos, right? Looking at the New York Stock Exchange floor with all that screaming and all that craziness, super unsustainable. Nobody can sustain that, right? This scenario, which is what a lot of us think is the right way to be, is a total lie. This is totally unsustainable, right? You cannot have this going on in front of you for a long period of time, and you certainly cannot make this a livelihood because you'll burn out entirely and probably burn out your entire accounts as well because you can't keep up with all of this, right? I, like I said before, have one chart, one screen. I used to have 3 monitors and I was losing nonstop because I was constantly in analysis paralysis. You do not need this at all. Misconception to the nth degree. And the other thing is all the shiny, fancy softwares, indicators, algorithms, alerts, those are all lies. The only people making money from that are the people selling you the softwares, indicators, and alerts. That is not how you make money with day trading. You have to understand what is going on and learn it, and it could be very simple. Okay, the other thing is I hear so many people, especially who trade equities, stocks, they wake up at 4 in the morning, sit for 2-3 hours researching the news like maniacs. The market opens and everything they just learned went to shit because none of it was what they were learning, because the market moves differently. It moves on emotions and technical analysis, barely on the news. You know, it's buy on the rumors, sell on the news. There's a reason for that. You need to know your technical analysis. The majority of the time the news are out, it's a bunch of quote unquote experts who have their own agendas, and that's what they're pushing. It doesn't work. You need to understand technical analysis, right? That is the market research you need to do, is the technical analysis, understanding what is happening in front of you, and that is that market language. The other massive misconception is non-stop being in and out of trades. Okay, we all know this. We've all been there. We've all done this. It's called trigger happiness, and it is a horrible thing. When I first began, I used to trade like 30 or 40 trades within one session, which lasted like 2 hours. Totally unsustainable. I totally lost money on the commissions if I was even making money at all. So I hate this analogy, but the best way to understand what a real pro trader is kind of comparable to a big game hunter, right? Imagine a big game hunter. Do you really think they're going to go out and start shooting at any mole rat, prairie dogs, or even like a big insect? No, they're going to sit and be patient for the big game. Pro traders, they probably take between 1 to 3 trades per day, but they are calculated with a strategy and patience, a lot of patience. Okay, that is the most important thing of all. Nonstop action, it's a lie. Trigger happiness is a lie. And what I say the most radical way to trade is conservatively. Being conservative trader is sustainable, not aggressive. Aggressiveness never works. We hear all these big aggressive movers about their big wins, but you never hear about their huge losses, right? Small profits daily bring you the profits yearly. And I would imagine the majority of you who are sitting here today, you want this to be your livelihood. You don't want to just go in on a one-off. You'll lose all your money. I can guarantee that. It's about, what is it? It's not a sprint, it's a marathon. It's really putting in that time and putting it in. The other huge thing is I coined this term, FOMAT, fear of missing a trade. Day trading in general, anything with the markets is emotional, right? So when you're seeing something that you think you just missed a trade, you start to chase the trade. By the time you get into that trade, you get stopped out. Then you want to revenge trade, and it just topples down, right? It's a domino effect of emotional bad choices. So you have to understand one thing: there is always another trade coming. Always another trade coming. So if you see one and you missed it, who cares, right? It's like FOMO, the fear of missing out of something cool, fear of missing a trade. It's a biggie in this industry. You got to just sit it out. If you missed it, big deal. There's going to be another million coming your way. Maybe not that same day, but definitely the next day. Okay, so Now, let's get back to that one instrument, that one musical instrument that your child chooses. We're going to talk about what to trade. We all hear about stocks, right? A lot of people are like stocks. Oh, when they hear me say trading, oh, stock was stock. But stock our equities is only about 25%. To be honest with you, only like 20% of the tradable markets out there today, right? So let's break it down. Like I said, if you're going to start trading, even swing trading, pick one financial market. And within that financial market, you want to even go more niche, right? You want to get laser focused. So for instance, Forex, what is Forex? Foreign exchange, right? It's when you're exchanging currencies, pairs. If you want to do that, you need to come up with one, at the most, have two pairs to follow, right? Because you have to be on it. You have to see what's going on in the governments. It's a lot of following, right? So you don't want to also just stretch yourself thin. Find the pairs that you really want to stick with and only do them. And when you master, then you can move on to the next thing. Equity. So I get people are like, oh, what do you trade? I trade stocks. You know, when I hear people say I trade stocks, I know right away they're an amateur. There are 5,000 types of stocks out there, and that's only the US market. So when I talk to a pro trader, they would normally say that they maybe trade a specific sector, maybe pharmaceuticals, maybe tech, maybe entertainment, but they focus on that. Or big caps, small caps, indexes, penny stocks. I'm totally not into penny stocks, but I'm not going to really go into that right now. And I know a lot of pro traders that only trade Amazon, Apple, Tesla, Facebook, and they focus on them and they are killing it because they are laser focused. Okay, laser focused. Find your thing. Find that one thing and master it. We all know Liberace. We've all heard of Liberace, right? He is a master. You could love him or hate him. I don't care what your opinion of him is, but we all could agree that he was phenomenal. He was super talented. And I can guarantee you, if he picked up a guitar, he could probably kill it with a guitar. But he didn't. He knew his mastery was the piano. Master your one, move on to the next. I have yet to see anybody who has mastered one who is trading many before they move on to the next. Okay, futures. Again, if you're telling me you're trading futures, I'm going to be like, okay, you are definitely not a pro. Why? Because when you're trading wheat or soy or sugar, you will not be trading the indexes the same way, right? I trade the ES Mini. That is it. That is my thing. I love it. That is what I love. It is one instrument in the futures, right? So if I'm going to say futures, I'm certainly not going to say that I'm trading the E-minis while I'm trading crude, while I'm trading soy. You can't. They are so different that you cannot have that same strategy for them all. You need to find that one. Options, the same thing, guys. Find your one. Find your mastery. And of course, we have crypto. Crypto is an incredible market. It's an incredible market. But when you're telling me you're trading crypto and then you're maybe dabbling in Bitcoin, I know that you're not doing much, right? Because Bitcoin is one out of the 6,000 different projects and currencies of cryptocurrencies. Again, find the altcoins, find the projects that you like and maybe do 2 or 3 or 4. Don't tell me you're doing crypto because crypto is 6,000 different ones, right? It's a huge thing. All right, now I want to talk about demystification of brokers and margin accounts. One thing that I get from people a lot is when they want to trade, they're like, okay, open up a brokerage account. It's literally like a medical student in the first year saying, okay, I already opened up my office. And they still have to go through all of that education. What are brokers? Their business and their only business is you putting in your money and commissions into the markets. They don't care if you know what you're doing, and they're probably better off if you don't know what you're doing because they're going to get more money from you. Brokers should be one of the last things you should worry about. And I brought up margin accounts before. What is the margin account? If you guys don't understand, the brokers are going to make it sound like this huge perk that they're giving you. What is a margin account? It's a loan shark, right? Brokers tell you, well, if you have this amount of money, we will lend you up to that amount of money so you can buy more. But they don't tell you that if you lose, you're going to have to pay that interest. Even if you win, you're still going to have to pay them interest on that loan. You do not need a margin account. That is not obligatory. You do not need a margin account. You could actually just have one. And I always tell them, I don't want margin. I don't even want to be caught in the trap of having a margin account. Okay, now understanding commissions, live feeds, and quotes. If you are trading crypto, do you really want to be working with a broker that specializes in equities? No. Why? Because you don't go to an oncologist when you have to an oncologist if you're having problems with your eyes, right? It's specialties. Just because they're both medical doctors does not mean that the oncologist is going to be able to help you with your eye problem. It's the same thing with brokers. That's why it's important and crucial to know the one instrument you're going to work. So if you're going to be trading crypto, find a really good exchange. Kraken, Coinbase, Binance, versus if you want to do futures, you know, there's amazing futures, AMP, Ninjatrader, there's so many, and they offer the best commissions and the best live feed, right? Because a lot of people get delayed feed. Have you ever seen that delayed? Because they're not on their specialty platform. What does that mean? If you're day trading in the second, do you want to get something that was 20 minutes ago? No, you're going to lose. You're an amateur, right? So you need to understand that live feed is the gasoline of your trading. And where does all that come from? Platforms. You need to have a pro platform. You cannot be scrolling on Robinhood and Webull. You cannot drive a minivan if you want to be a Formula One driver, right? You need to have the proper software, the proper platform, and that is the only money you should spend, because good, strong platforms offer you universal indicators. Okay, it's so important. You need to find that platform, and when you get the platform, you need to make sure you know how to use it before you start throwing money at it. Super important. Okay, let's talk about the day trading lingo. Okay, intraday trading. What does that mean? You're literally in and out of your positions in that same day. That's it. Because if you don't understand intraday trading, you're not going to do well. Why? Because when you're day trading, you do not need to look at a chart that is 1 week or a year. You need to be looking at charts that are 1 minute, 5 minute, or 15 minutes, because you're intraday trading, right? If you're swing trading, then you can look at a day chart or a week chart. You have to understand your time frame, because you will be completely thrown off if you're looking at a week chart when you're day trading. It won't work, right? Understanding basic terminology. What's a bull market? Market going up, market trending down, up, market going up. Bear market, market going down, market trending down. Understanding that there are 3 trends: upward trend, downward trend, and the sideways trend. People don't realize that there are 3 very important trends. You have to know the sideways trend, and that's actually where you end up losing the majority of your money. Now, it is so important to have your profit targets in place. What does that mean? Just like we hear about putting in a stop loss, which is the risk management, is basically what you're doing is you are in control of the market. You are the boss. You are telling the market, this is where I want to be filled for my profit. And this is where I want to be filled in for my stop loss, my risk. I am not willing to give you any more money than this. And profit targets, why are they as important as stop loss? Because greed will always win, right? You can put in your profit and then you're seeing that the market is heading that direction. Oh my God, it's going to continue. It's going to continue. You remove the profit target, or you have a mental one, and boom, it turns on you and goes and stops you out. And even worse is the mental stop. You tell yourself where you want to get out, but you don't put anything there. And we all know ego will always win. Ego will always win, correct? So that's exactly what happens. The ego will always take over. So you have to put these in. Every single strong platform has these capabilities. You put in your profit target, you put in your risk management when you are in a trade. And it is all done with your charts. And I call it the holy grail for traders. This is your chart. This is my chart. This is it. I use 2 indicators. That's it. I trade 1 instrument, 2 indicators, and I could do it from anywhere in the world. What are indicators? You can certainly just go and use a bare naked chart, right? A price naked chart, but eventually you're going to need those indicators to understand how it's working, where the strengths are, so you can find that all platforms have universal indicators. So you'll be able to understand which is the best one for you. Okay, so make sure you're doing that. Trending markets. We've heard about the trending markets, right? If you're a day trader, we love the downtrend as much as the uptrend, and we hate the sideways trend. Sideways trend is consolidation, it's indecision. You need to stay away from that. Now, what does this mean? When you're trading and you're going into a trending, upward trending market, what are you doing? You are buying. You are going long. What does that mean? It means you are entering at a lower price point, exiting at a higher price point, and taking the profit in between. And selling, what does that mean? Going short. It's literally the opposite. It's when there's a downtrend and you are entering at a higher price point, exiting at a lower price point, and you're taking the profit in between. That is selling, going short. So whenever you hear people say that, you have to understand. Now, as before, as we talked about the profit target and the risk management, when you're telling the market where you want to get out, you also have to tell the market and be the boss with the market of where you want to get in. And what is that? That is called a limit order or an order weighting. You are telling the market, I want to see my setup from here. Because if you're doing market orders, here's the reality. One, you're a total amateur. No pro does market entries. Two, the reason why is from slippage. Do you guys know what slippage is? Slippage means when you're telling the market to just market entry, you're showing the market that you really don't know what you're doing because maybe it looks good here. Okay, I'm going to go market entry. So you don't have a strategy. So they penalize you. And that penalty is slippage, right? It takes immediately, majority of the time, almost 25% of the money. Like if it looks like it's at $1, it's going to, and you want to go long, it will enter you at $1.25. Okay? You have to understand you do not do market entries. If you're a pro, you tell the market where you want to enter, and that price is where you want to enter. And the same with the stop limit. I'm going to go back to that risk management. Don't have a mental stop, because if you're just going to go press a market entry on the stop, meaning you want to get out because you don't have a stop, immediately 25% is going to get lost. So you're going to, on top of your loss, you're going to lose another 20 to 25%. Okay? So this all boils down to technical analysis. I've been saying technical analysis a lot during the presentation. I'm going to say it again. Technical analysis, this is all you need to know. Pretty basic stuff. You go to get it through your indicators. You have to understand where there's areas, where there's divergences, reversal patterns. It's that basic. Areas. What are areas? If you guys don't know what resistance and support areas are, stop being live. It's literally getting into a car and not putting on your safety belts. Okay, what is a resistance area? It is an area that the market is hitting. It's a ceiling over and over and over again. That means there is some resistance there. There is something that is stopping it from continuing. You do not want to predict what the market is going to do. So you need to stop and just watch until it breaks it either in the same direction or shifts direction, because that's part of that indecision area. Support is literally the opposite of a resistance area. It is the floor of the market. It is the floor. It's the same thing as a resistance, but on the floor, where the market is hitting it over and over and over again. You need to draw these in. They cannot be mental. They have to be drawn in. Every platform has this particular benefit, I guess, or feature to it. All right, let's do a little quick understanding about reversal patterns, because they are the simplest to read and they are on any platform and they are totally free indicators. They're the best. I call them telltale signs. What are reversal patterns? They are double tops, triple tops, head and shoulders, double bottoms, triple bottoms. That's right there, a perfect example of a triple bottom. Does it mean that the market is guaranteed to turn there? No, it's not a reversal guarantee. What it is showing is that the market has slowed down, and you never want to be in a weak market, right? What is divergence? I personally use the MACDs and price action. So as you can see on top, the price action is going up while my MACDs are starting to show that it's going down. What is that showing me? It's showing me that the market is losing its strength. And we go back to, what did I say before? You do not want to be in a market that's losing its strength. You want to be in the strong moving market. That is your best way to do it. Otherwise, you're literally just going to keep on donating your money to the markets. Now, let's put this all together. And remember, I have all of this for you and a lot more in makingofadaytrader.com, where you could get this cheat sheet, makingofadaytrader.com. All right, so let's put it all together. We have all heard about the breakouts, right? We know that the breakout is a fantastic trade, but if you do not know how to spot a valid breakout, how are you going to be able to actually get into one, right? So how do we spot a breakout? That's when we put in the resistance and the support areas. That's when they are crucial. Okay, so you have to have these there, right? So the market is moving up and all of a sudden there's massive resistance and boom, it breaks out. So a good way to explain a breakout in layman's terms is pretty simple, right? Let's say that you live here, you're all the way at the bottom, you live south, and your best friend calls you up and they live north, call you up and they're like, hey, I'm having an impromptu barbecue. You want to come over? And you say, yeah, for sure. You've been to that house a million times. You hop in your car, you're full of confidence, you're driving. And on the highway, it's all great. And all of a sudden, there's a huge construction, a huge detour sign, and it's taking you off the highway. What goes on then? And I don't care if you have Google or Waze, because a lot of times it doesn't keep up. So all of a sudden, I don't know about you, but I'm always stressed out. I'm freaking out. Oh my goodness, where are they taking me? I don't know these little side streets. What if they stop showing me the detours? What if I get lost? What if they never, I mean, all these what ifs, right? What happens? I'm in doubt. I'm in a sideways consolidating zone, right? An indecision zone. Do I want to be making money decisions in that moment? Absolutely not, right? You cannot make money decisions in a moment, right? Because you don't know what's going to be next. However, all of a sudden there's a huge sign and the construction worker is like, okay, we fixed the road, you can get back on the highway. And boom, you are driving on that same highway again, full of confidence and raring to go. That's the breakout trade. That's when you have that extra confidence, that power in the renewed movement. Okay, so that's the breakout. So how do I use the breakout trade? Like I said before, I tell the market exactly where I want to enter. And once I'm in the trade, I tell it where I want to get out profit and risk. So I do that with my MACDs by watching where there's massive strength, where there's absolutely no divergence, right? I see the zero line here, massive strength movement, and I tell the market, I want to enter here. If you retrace to this section, this is where I want to get in. Okay, so remember, makingofadaytrader.com. Now, what I want to do right now, oops, hang on just a second, is I want to do a quick show in the live market. Okay, today has been a phenomenal day. I don't know if any of you guys have been in the market, but it has been absolutely phenomenal. All these greens are different trade areas that I got in. Okay, I mean, we're talking a lot of amazing trades. But how do I know these trades, right? Like, for instance, I always have all of my areas totally marked off. I know where the resistance areas are, the support areas, the channels, the breakouts, when it actually shifts direction for me. I know exactly when it's shifting direction. I always know where to enter with my MACDs, with my indicators. I use EMA lines as well, right there. And today was just super high volatility. And this is my chart. This is what I use, okay? As you can see, the market is just moving amazingly right now. We're in the last 30 minutes of the day, right? It's 3:30. I'm 1 hour behind New York time, or Wall Street time, I like to say, Eastern time. So as you can see right now, the market is consolidating. After such a huge move, this is a very likely thing for it to do, right? Because it's like running, and sometimes you just need to slow down and figure out, wait, am I too tired? Am I dehydrated? Do I have a cramp? I don't care if it's running down or running up, because for me, I'm good to enter either way. Okay, and as you can see, it wants to continue moving up. there? Because my internet just seems to have gone off. Can you guys let me know if you are hearing me? Sherry, are
Now I
you
can
hearing
hear
me?
you.
Okay. I don't
You
know
were off for
where the,
about maybe 10, 15 seconds.
okay, cool. Okay, so not too bad. Okay, awesome. All right, great. So hopefully you guys understand and are able to see how the market is talking to you, how it's moving, all of that, correct? This is what my chart looks like. I trade the ES mini and I don't use a time chart. As you can see to the top, I have a tick chart. What does that mean? It means right here, each of the bars has 610 tick charts. Because I don't like to use a lot of indicators, I don't use the volume indicator because the volume indicator is lagging. But if I use a tick chart, each bar has 610 ticks. It means it's showing me that there are 610 transactions in the moment. And when it's moving as fast as it is, it means there's a lot of volatility. It's going to be really good movement. And that is really, really important to see and understand. Okay, guys? So this is what my chart looks like. And that's all I need is just this one chart. Okay, so now with all of this and everything that you guys have in front of you, we have everything we need to take action, right? We have these summits, the presentations, YouTube channels, the books. I mean, we have everything if you're self-educating. But the reality is, how do you guys know if you are doing it right? How do you know if you are actually doing it right? Who is there to be accountable, to show you, yes, this is a support area. No, this is not how it works. How? Because all of this is great, but the real question you're probably constantly asking yourself is, how do I get really started to be a pro trader? And this isn't only from beginners. I get seasoned traders asking me this all the time that are still consistent, that are still not consistent and losing money. They ask me, what can I do to turn this around to be profitable consistently? And a lot of times, just lacking the understanding of the basics is all that is really holding you back. It's that understanding of the basics. It's literally like getting into a car and not having the basics, not understanding where is the gear shift, where is the clutch, where is the accelerator. If you don't know these things, how are you going to become a good driver? And even worse, if you're told, all right, put your seatbelt on, but you've never seen a seatbelt, and this apparatus can save your life, how are you going to be able to do it? How are you able to be able to find that seatbelt to save you from crashing? So here's the reality is, my sad truth is I spent over $20,000 on my own trainings. No joke. I've had one-on-ones, I've had different retreats, conferences, summits, alerts, trade groups, trade chat rooms. I mean, you name it. I've had that all. And I've spent over $20,000, and yet I was totally struggling for years and losing money. Why? Because every time I was asking basic questions about reversal patterns, divergences, trends, I was treated like I was either born with that information or completely ignored, because nobody goes back. They basically, what a lot of people are doing is you're putting in windows before you even put in your wall. So all your windows are going to keep on falling, right? It's the same thing with if you want to be a musical, if you want to learn a musical instrument. When you arrive to the academy, instead of going into music theory or how to hold a flute and how to blow into the flute, you're thrown into the orchestral pit and are expected to keep up with professional musicians. It's not possible, right? The majority of people drown. And I was in that exact same boat that at the end, I pretty much ended up losing almost $4,000 within 5 minutes. And this was after 2 years of truly struggling. And that's when I literally just quit. I quit, right? But I bet you everybody in this room has this exact idea and understanding. We get bit by the trading bug and it never stops itching. And why is that? Because deep down inside, we know that we could do this. We know that we can get this, that we can do this. So after I quit for about 3 or 4 months and I could not stay away. I decided to come back and learn the basics. Just going back, I had 3 different monitors going. I literally took 2 and threw them in the garbage. I had over 10 indicators. I deleted them all and just went to naked price action. until I started to put in one at a time indicators to see which one works. A lot of people have indicators on there and they don't even know if they're working for them or not. So eventually I came down to my two. So I don't know if any of you guys have ever heard of Coach John Wooden. He was one of the top basketball legendary coaches in the world, technically. He's passed away now, but his entire philosophy was, when in doubt, get back to the basics. And this man has accolades more than we'll ever have in our lives. 88 national championships, 10 NCAAs. I mean, this man is amazing. And he worked with superstars of basketball. He worked with the best. Yet, every time he started the season, he would start with the basics. He would go into how to tie your shoelace, how to roll up your sock, how to dribble. Why? Because it doesn't matter how good you are. If you are on the field and your shoe falls off, you sprain your ankle, or you get a blister, guess what? You're out for the season, right? Because the basics were not put into place. You need to have the basics. So for today only, and for people only, for the participants that are live today, right here, I am showing you my introductory course, Bootcamp for Day Trading. You could do it on any apparatus, iPads, tablets, phones, desktops, laptops, any. This is your next step. Either it's your first step or your next step. This is the step. Here's what you guys get in the course. First of all, the prequel of trading, understanding your platform. I will, in 30 minutes, it doesn't matter which platform you'll go, I will have a setup tutorial for you so you do not have to worry and struggle. I struggled for almost 5 months trying to figure it out. Nobody was helping me. And I go over that, boom, 30-minute, it's included tutorial. Then we talk about the entire anatomy, the process, dissections, the trends, movements, upward trends, sideways, down, reversal patterns, really, really understanding it. The telltale signs, the reversals, understanding support and resistance areas and divergences, putting them all into the play and respecting those areas because the market respects it. And understanding the breakout trade, mastering it, understanding how to spot them, and importantly, how to avoid the fake out breakouts, because those can lose you a lot of money when you feel that it's a breakout, but it's a fake out breakout, and there is a way to completely avoid that. Plus, you get unlimited access to the curriculum, which is priceless. So for all of this, the value is at $1,600. Okay, this is what you get. You get the prequel framework, understanding the workspace, understanding market anatomy, dissecting of the trends, respecting your areas, the power of the breakouts, $1,600 and unlimited use of the curriculum. And let me share something really important. For some reason, it's okay to see professional athletes working with coaches and mentors, yet we don't realize that we need that just as much. So included and a bonus just for the people who are live, completely free part of this package, you'll get 1 month, 1 month, one-on-one mentorship with me, unlimited, one-on-one feedback with me. And on top of that, I have one extra thing. I have a live trade chat room. It's me live in the trade chat room, not a moderator, not some hired hand, me. And you'll get that for 30 days for free. With that, again, it's live, just more access, and you'll get to work with me. All of this is valued at $2,600. For you guys, only $97. One-time fee. No, it's not a membership. It's a one-time. $97. You get all of this right here. Bootcampfordaytrading.com. 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 You'll get all of that for $97. Here's what some of my students say, and I have students from all over the world. I just finished the boot camp. Invaluable. Marina is money best spent. The feedback I got, it all clicks. Course is absolutely amazing. Marina is an amazing teacher. This is a great course. I have zero experience in this area and total non-techie, stay-at-home mom, totally catching on. Join today. Guys, I normally charge $297 for this. You get it for 66% off. Bootcampfordaytrading.com, $97. $97. You know what? The reality is we all know that $97 is not even one trade that most of you guys take. And you'll get 1 month one-on-one feedback with me so you could talk about the different trades, unlimited curriculum access, and to be in the live trade chat room, seeing how I do the live trades in live market, asking me questions, participating. But here's the thing, guys, because of that one-on-one mentorship, I'm only able to take on 25 students, only 25 students, because I want to give you my full attention. And when you go to bootcampfordaytrading.com, this is where you are going to go. And if you look really close, you can start with $59. $59. You can get started and still have everything. So bootcampfordaytrading.com. Go here right now. Honestly, $97 one-time fee. You get 1 month of working one-on-one with me. That alone is absolutely priceless. Bootcampfordaytrading.com. Bootcampfordaytrading.com. All right, guys, let me know if you have any questions. Bootcampfordaytrading.com. Okay, $97, everything. You'll be working with me one-on-one. Bootcampfordaytrading.com. All right, guys, let me know if you have any questions or anything else that I can help you with. And I just want to say a huge thank you for being here and for taking your time out. The fact that you guys are here, it's showing that you are interested in learning. Okay, so self-educating only goes so far. We have a very limited amount of time. That is our greatest commodity. So this will just cut all of that right away for $97, bootcampfordaytrading.com. And if you have any questions or you want to talk to me privately, you can go to thetraderchick@gmail.com, and I'm happy to answer any of your questions as well. And just I want to say thank you so much for having me. It was really fun, and thank you. Thanks, Sherry, for inviting me again.
Well, I really appreciate you being here with us, and I don't know, guys, we still have many people in the meeting. You guys should go take a look at this. You should take advantage of it. And I happen to know that Marina delivers a lot more value than what she's written down here. That's pretty awesome. That's fantastic. So, well, we're a few minutes early. Do you have anything you want to add? If anybody's got questions, now's the time to do it.
All right, guys. Well, I look forward to seeing you inside the boot camp.
All right.
Excuse me.
All right. Well, then we're going to go ahead and we're going to call it a day. Thank you so much for being with us. I want to thank all of my speakers for coming in and bringing these trainings for free. And I want to count on you coming back next year. Is that all right?
Yes, absolutely. I'm looking forward to it. And I can't believe the next year is a month away.
I know. I know. I know. It went really fast, and that could be a blessing, right?
It's crazy. Yeah. Well,
All
thank
right,
you,
well,
everybody. And thank you. And I wish
thank
you guys all a happy rest of the day.
All right. Thanks so much. Have a great day.
Bye.
Bye-bye. All right, folks, I want to thank you for staying with us today. I want to say how much I appreciate you being here. And I also want to wish you a fantastic holiday season. And I hope you'll come back again. We do this twice a month. If you have a favorite speaker that you'd like for me to invite to come and train you guys and set strategy in place, please email me at support@tradersexclusive.com. Don't forget we have a replay. And finally, I want to say trade well. Bye-bye now.